Morning, people. Good morning, everyone. Please turn on your camera. Yes, people. Chalo, chalo. Let's start. Good morning, Karina. Good morning, Sindhu, Bhavna. Good morning, everyone. Chalo, people. Get into studies mode. Drishti. Good morning. Hyderabad batch, right? Yeah. Uh, 7:59. So we can start. Mohsin. Good morning. Please start your camera. Start your video. Jay. Good morning, dear. Can't read the full name. K1008234 Madhavi or Madhu. I don't know. Only half of the name is displayed. Okay, people. So let's start. See, first of all, a quick introduction about myself. What you need to know is that what I teach and what's my name, right? As such, I think you know it's financial management. So I'm going to teach you financial management, right? Yes, people, please. People have started getting online. Good, good, good people. Uh, Yeah. So I'm Professor Sandeep Neve. I'm a chartered accountant and I teach financial management for CA Inter at JK Shah classes for all the branches of JK Shah classes. So I think that is more than sufficient introduction, right? Right. My name is Professor Sandeep Neve. You can call me Sandeep sir. And yes, we'll be starting with financial management. Okay, students. So I am very sure this is not your first lecture. The batch has started, right? Much before than this, right? So you're aware that you will be mute throughout. You cannot chat with anyone, right? And in case you have to ask something, you have to raise your hand. That's it. So at an appropriate time, I'll allow you to talk to me. Is that clear to everyone? Right? Yeah. And then, sir, how do we communicate? So see, in all other batches, we've been yes, Mohsin is visible finally. Yeah, in all other batches, I've been doing the same thing. I tell them, okay, see, let's get back to the olden and pre-historical means of communication. I keep asking, if you say one, if no, say two. Then people reply like one or two, whatever. Right? Did you understand? So to nod your head. Don't just sit idle. It's not something like early morning, some Baba's pravachan going on, right? So don't just sit idle, right? Respond that way. Possible. It is possible, guys. We've been doing it in so many batches. I have done it in so many batches. That I ask students to, I show my screen. So I ask them, you don't show your screen, but you show your notebook. I give something to do. Okay, so solve this. Next day, sir, how are you? Sir is not going to come to Hyderabad right now. No. Even though I can't come to Hyderabad right now, physically I can check it on screen, right? So this way it can be always very participative and interesting, right? Chalo, without wasting any more moment, let's start, guys. So as I told you, I'm going to teach you financial management. Sir, what is this subject and what about it? So fine, take a quick look. Okay. Hello. I'm not going to take any big seminar, okay, on what are the subjects and all that. Just showing you this is your whole syllabus, group one, group two, right? In this group two, you can see this paper number 8, correct? Visible, guys. My screen is visible, not your heads. Yeah. Am I clearly audible? Yes. Thank you. Thank you. Yeah. Yeah. Okay. So paper 8, financial management and economics for finances. Of that, part A, section A, that is financial management, is what we are going to learn, right? Okay. That is more than a sufficient introduction. So let's get into the subject. So guys, as I told you, I'm going to teach you financial management, and you must have received your notes. Hello? You have your physical copy of notes with you? Yes, thank you for showing it, Asha. Thank you. Huh. Yeah, now we know how to communicate. That's great. Huh? Because if I turn on audio for everyone, I'll feel like I'm at Nilofer and having tea early morning. I'll really get a feel of being there at Hyderabad. So let's uh, yeah, let's start with it then. Okay. Yeah, and I hope everybody pays proper attention. Yes, people. So, see, just a quick thing about the subject. As we understand from the name, right? What is the name? Financial management, right? And you all are commerce students, so we can always make some guesswork about it, correct? What must be financial management? It is all about managing finances, right? See, you must have done this before also, not financial management, but whenever it comes to writing some theory answers in economics or organization of commerce, right? We just get one word and we weave a big answer around it. We all are good at it, correct? Right? We all are commerce students. I'm same category. I'm not a chartered accountant by doing BSc, right? So we all are in the same category. We all have done that at different times in our colleges, right? We just get one word and we weave a big essay around it. So same way, what is financial management, sir? It will be management of finances. As simple as that. Absolutely right, and that is a correct interpretation. It is management of finances. Now the next question comes is when is the management of finance required, or when an organization needs finance? And probably, guys, the answer is that it's like asking a living person that when you normally need oxygen, right? It's just like that if you are living, you need an oxygen, correct? So if you are running an organization, you need finances all the time. You need finances. Is that right? You want to start the organization, you need finances. You want to continue, function, grow, expand, you need finances. Guys, even for day-to-day requirement, you need finances. The funds that you need for day-to-day requirement, that itself is called as what? Working capital. Have you heard before? Yes, right. I can see people nodding, right? I can get that, right? So don't keep that inhibition that how should I reply like this? How should I nod? Sir is not in front of me. I'm not in the class. But guys, this itself is a class now. Keep aside that inhibition. This itself is a class, right? So please, it's absolutely fine. You and me, we keep communicating. That is the best way to learn. That is the best way to remain active. Jay, hair are absolutely nice. No need to give them shape again and again. Okay, yeah. So that means what? We are now see in my lecture when you learn no from me, you have to think as if you are managing the finances. Why make it so clear? Because you know what, 11th standard, 12th standard, CA foundation, at all these places, what you have been doing is you have been playing a role of an accountant. Do you agree with me? You've been playing a role of an accountant. Means what? Whenever a transaction happens, you have to record the entry. You've been taught from the very beginning, see, no transaction, no journal entry. Am I right? You've been taught from very beginning, no transaction, no journal entry. Correct? And now, you know what? The subject I'm going to start, financial management, and the topic that I'm going to start. Okay, I'll come to the topic. See, the today's topic that we are going to start is all about what? Is all about cash budget. Okay, topic's name is what? Cash budget. Okay, guys, tell me, have you heard the word budget earlier to this? Yes or no? Yes, you all have heard, right? I think with the reference to economics. Yes, yes. Very soon. Today is what? 20th. On the very first of the Feb, our finance minister would be presenting the union budget. Now you tell me, she presents the budget for the year which has gone away or for the years which is going to come? The year which is going to come. Am I right? You understand that? So budget is a accounting for the past, or it's an estimation. Estimation. You see, you speak. No, I can get your lip movements also. Absolutely fine. Sir, what is the point? You're not hearing to us. Absolutely, I'm hearing to you. I'm there. I'm there on the branch. Feel that way. I'm there on the branch, right? I'm teaching you from the dais. Almost the same feel, right? So it's absolutely fine. Keep talking to me. What will happen at the most? People at your home will think he was already half mad. Now he's full mad. Doesn't matter, right? Opinions of other about us really don't matter, right? See what must be happening. Am I recording the lecture? Yeah, I'm recording. See, you think that you are going to attend my lecture for 3 hours. I'm going to give lectures from today morning till today night. What my family members must be thinking about me? Absolutely mad. Looks at the screen, then goes on talking and expressing and everything. So it doesn't matter beyond the point, right? Let's go ahead. So guys, our today's topic, cash budget. Okay. See, now few things I'll tell you about cash budget. By that, you by now you must have understood. So we're going to prepare what? We're going to prepare a cash budget, right? So please understand, we're going to estimate two things. Okay, what we are going to do? We are going to estimate two things. What can happen with cash? Either we receive the cash or we pay the cash. So we are going to estimate two things. Number one, we are going to estimate receipts. Number two, we are going to estimate what? Payments. Correct? Two things we are going to estimate: cash receipts and what? Cash payments. Sir, why do we estimate all this? See, dear students, it is very important to run the business smoothly. Correct? And to run the business smoothly, what we need? We need vitamin M, money. Correct? Now we need vitamin M. Absolutely. So it is always good to make a budget and find out that what are our probable receipts and what are our probable payments. See, if the scene is like this, receipts are more than payment. Can I say this is surplus? Relaxing scenario. Receipts are going to be more than payment. Surplus. Relaxing scenario. You can plan to invest some money. If you have already taken some loan, you can plan to repay that loan. But if it is going to be the other way around, receipts are going to be less than payment. Can I say this is a situation of deficit? Yes, definitely it's a situation of what? Deficit. See, in such case, no, I need to rush around. In short term, in my business, there is going to be some deficit. So that does that mean that I close my business altogether? No, no, no. It might happen, dear friends. It might happen. See, suppose I'm a manufacturer. Let's say I'm a manufacturer of say t-shirts. What will happen first? First, I'll have to buy the raw material. Correct. I'll have to employ the people. I'll have to hire the premises, pay the rent, pay the electricity, pay, 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 and pay. When I will earn money, after 4 5 months, when my production cycle is over, that time I will have receipts. But till that time, what? Till that time, my receipts would be less, in fact, zero, and my payments would be on a higher side. Does that mean I close the business? No. Temporarily, I will have to borrow, right? When afterwards, when I start selling the shirts, I'll be in this situation. So I'll repay the loan. Fine. So what the main purpose of cash budget is to do what? Is to estimate the receipts and estimate the payment. And if there is a surplus, we will save. If there's a deficit, we will borrow. Am I clear with this, guys? Am I clear with this? You could give some thumbs up. You could give some reactions. I will send you some reaction. Okay. A flower from my side to all of you. You could do that, right? You can give a thumbs up like this physically. If you're bored of pressing the button over here, you could just say like this. That also makes, yeah, that also makes it clear. Okay, you all have understood. Okay. Yeah. Thank you, people. Thank you. That's a simple way of communication, guys. Okay. Yeah. So see, it's a very simple topic. Trust me, in every topic that I will start, and I will always say these words that this is a very simple topic. Okay. But this is genuinely a simple topic. Okay. So let's start. We will go through the theory a little. Fine. I'm going to read this. See, cash budgets are a tool for forecasting short-term cash requirement of an enterprise. They provide the blueprint, the possible cash inflows and what? Cash outflows that are expected to occur when in the immediate future period. They assist management in determining what surplus or what shortage. Shortage means only deficit and take what suitable action. Oh, guys, take suitable action means what? Just now we discussed, right? What we discussed that, sir, if there is a surplus, no, we'll invest the money. Correct. First, see, I'll keep a priority of repay the loan. First priority, repay the loan. In case I have taken some loan, no, and I have some surplus money with me, what will be my first priority? Repay the loan. Even after that, if I have a surplus, I may do what? I will invest. Why? Because in future we may need the money, no, right? Okay. And in case I run short of money, deficit, then I will do what? I will borrow. Okay. Cash budget can be prepared for what? Short period or long period. What does that mean? Guys, understand. So I take you back to that thinking that we are a finance managers. We are not preparing anything called as final accounts, and we're not going to submit it to the government. Getting my point? So who would be asking us to prepare this cash budget? The directors of the company. You are assume that you are employed as a finance manager. Don't come asking me, sir, what will be the salary? Assume that you are employed as a finance manager of the company, right? So your boss comes and tells you, hello, prepare cash budget for 3 months. So what to do? Prepare, right? After 4 5 months, he comes again. Now you prepare for 6 months. What you are asking again and again? See, you can't use these words. You'll have to prepare. My point to convey you is what? That see, it's an internal document just as a support to the management policies, right? So there, if they ask you for 3 months, prepare for 3 months. They may ask you even for a week's time. Just for the next 7 days, you prepare a cash budget. Okay, fine, prepare it. As simple as that, right? I hope everything is clear. Now I'm not going to take your opinion on each and everyone. I'm going to continue screen sharing. In case you have any doubts, just raise your hand, okay? And then I will do allow you to unmute at a suitable time. But when you unmute yourselves, two things. First thing is that your video should be on. Those who have the video on, they only would be unmuted. If you keep the video off, you will not be unmuted, right? And then again, as we come across the warnings in the social media that whatever comments you're posting, they go public. Similarly, this is heard by everyone. So you have to be very careful about your words. Yeah. So now see what exactly we'll be solving. We will prepare a monthly cash budget. What you see on the screen is an example of a monthly cash budget. Okay, listen to my words very carefully. What you see on the screen is an example. Okay, because in case by mistake I use the word format, the next moment students pounce on me. Sir, you have to buy out all this. Is it a legal format? Is it like that you have to remember each and every word? Sir, give us some acronym. No, prepare something shortcut. No, no need, guys. This is just an example, right? So monthly cash budget, I would say example. How many months it is prepared? It is prepared for 3 months. Okay, how do we start? Common sense prevails, provided we have one, right? Opening balance will start with add what? Receipts. Okay, dear students, a question to you all. These receipts are actual receipts or estimated receipts? If you feel actual, then say one. If you feel estimated, then say two. Two, all estimated ones. Everybody understands this, right? So these are past receipts or future receipts. Future receipts. Okay, fine. So all these receipts are not the real ones, they are estimated ones. Common sense, guys. Take opening balance, add all possible receipts. Cash sales, collection from debtors. Now see what happens. Now few things come in pair, right? Means what? See, the moment I say cash sales, the automatic system inside you says credit sales, because cash sales and then credit sale. But see, we are preparing a cash budget. We will not be recording credit sale over here. What we would be recording, money, collection from debtors, raising of loans in case you take a loan. By taking loan, the money comes, right? Issue of share capital or debenture, sale of fixed assets or investments, and income from investment. Means if I buy shares of some other company, I might earn dividend. If I buy debentures of some other company, I might earn interest. Correct. So take a total, add opening balances, add all the receipts, take a total, call it A. Then from that, what? You subtract the payments. All possible payments, payment to supplier, operating expenses. Operating expenses means what? Like administration expenses, salary of people. All these things are operating expenses. Purchase of fixed assets, investment. You can see in a replica of all the receipts. Then redemption of shares and debentures, repayment of loan, interest payment. See, suppose we issue debentures to people, we will have to pay interest. We take a loan from bank, then also we'll have to pay interest. So can I say this is a this A is a total of receipts. This B is a total of all payments. Then what, guys? The next thing to do is we will suppose now you arrive at some A minus B and you feel that this balance is not sufficient. Okay, you feel that this balance is not sufficient. What you will have to do? You have to borrow. Now the question arises, by borrowing, what will happen? By borrowing, the cash balance will decrease or will increase? Increase. Everybody understand this? By borrowing, what will happen? Cash balance will increase, right? So what will happen? Can I say borrowings will add to my cash balance? Yes. Now you know, whenever you have extra money, you repay the borrowing. So definitely by that the cash balance will decrease. If you have the physical copy as shown by some of you, please mark these signs so that it will be very clear. Investment of surplus cash. See, whenever we'll invest, no, our investments will increase, but the cash available with us will decrease. So minus. And after doing all these plus minuses over here, I'll be left with the balance to be carried forward to next month. So guys, listen to me. Now, how we will have to prepare and close this cash balance. See, in this given example, this closing balance of April would become opening balance of May. Correct, people? Right? So can I just go on putting all numbers over here, all numbers over here, all numbers over here, just directly take all these total, just directly take all these total? Answer is no. How I will have to proceed? I will have to compulsorily go month-wise, correct? Write the opening balance of April, add all these receipts, then arrive at this balance, then arrive at this balance, then finally get this balance and take it over here. Then again close May, get this final balance of May, take it over here. Everybody understands this, right? Okay. So what the simple thing to remember? Start with opening balance, add all estimated receipts, subtract all estimated payments, correct, people? And then whatever is your balance, justify. If it is less, borrow. If it is more, if you have already taken loans, repay the loans. If you don't have any loans to repay, invest the money. Whatever is left out, you carry to the next one, right? Fine, guys. Clear till here? Absolutely clear. Okay. So now what? So now give us some theory to write. Like, we feel good. Like start with some theory. Give us some steps to solve. Right? Meaning, scope, objective. See basic things, guys. 5 lines and the format we have discussed. Still, sir, if you feel, give us some steps. Okay, you can note down 2 steps. Step number 1, read the question. Step number 2, solve the question. People have taken it very seriously. People have started writing. Sir, 2 steps are very less. Give us some more. Okay, step number 1, read the question. Step number 2, prepare the format. Step number 3, solve the question. Guys, the topic is very simple. Read the whole question, correct? Go on identifying. If you feel that it's a receipt, record it in the receipt part. If you feel that it's a payment, record it in the payment part. Am I clear to all of you? Right? Yeah. You can without any inhibitions nod your head, right? It doesn't cost you anything extra. We won't charge you anything extra if you nod your head and give me some confirmations of the things. Correct? Yeah. Please. Okay. Fine, people. So let's go on. So now, so what to do next now? If you have nothing theory to write, nothing else. So what we should do, sir? Shall we take a break? No. Way to go, right? We just started 22 minutes back. Okay. So now, yes, we will solve a question based on this. Fine. Okay. See, guys, listen to me. I'm going to solve the first question. Yeah, this question we want to solve, right? For that, yes, few things I've already prepared. The cash budget will look like this. Okay, see, this is for question number 1. Okay, we're writing like this: cash budget of a departmental store. The format I've kept ready, blank format. After which we'll go on filling it up. Cash budget of a departmental store is going to be for 3 months, Jan to March 2020. You read, you will come to know. Rupees in thousands, particular. See what I have done. Opening balance, add what? So I'm very clear. I'll say estimated cash receipts. So it keeps reminding you people what happens. You know, otherwise the accountant inside you comes out every now and then, right? I read in the question, The company is going to purchase plant and machine in the month of March. So you know what I say? The company is going to purchase in the month of March. No, people, the money will go now. So let me write in payments. And then people almost pounce out from their screens to my screen. They come to my home practically, sir, it is not yet purchased, sir. It is going to get purchased. Where did I say no? Am I making a cash account? I'm making what? I'm making a cash budget, guys. So this is all estimated values only, right? So hold on your accountancy department, right? Just an estimation. So estimated receipts. Here we will give around 6-7 lines. Take a total. Estimated cash payments, again 6-7 lines, take a total, and then closing balance carried forward to next month, that is A minus B, right? This is how it will look. Okay, I know you have a good facility of taking screenshots or taking a photo of the things, right? So you can do that, but I'll complete it, then do that, and then first we'll read the question. Okay, let's read the question very carefully. Yeah, last time when I told you the steps, I forgot to tell you that step number 1 is read the question carefully, not just read it. So let's read it, and hope you have books to make the necessary markings whenever required. Following from the following information relating to a departmental store for 3 months period ending 31st March 2020. Right? Guys, you know, right, which 3 months end before 31st March 2020? So Jan, Feb, and March. You are required to prepare the following monthly cash budget on what receipt and payment basis. It's like telling someone that you prepare a debtor's account on debit and credit basis. My dear friends, in the whole universe, whenever an account is prepared, it will always have debit and credit side. Like that, monthly cash budget will always have what receipt and payment side. That's it. It has no implication. Okay. Yeah. It is anticipated that working capital items, which items? Working capital items as on what date? 31st December 2019. Sir, why are you focusing on items? Yes, because it is working capital item. My concern to make you understand that working capital is equal to what? Current asset minus current liabilities. So what is next given in this table? No, some of them are current assets and some of them are current liabilities. Okay, how this date is going to be useful to us? The balance is on 31st December 2019. What the hell they are of our use? 31st December 2019. You know, guys, what happens next day? So there's a hangover generally on 30th after on the next day. I'm not interested in knowing that. I want a date. After 31st December 2019, the next date would be 1/1/20. So, my dear students, all these are our opening balances. Correct? Our cash budget is going to be for what duration? It's going to be for Jan, Feb, and March. Then what will happen? This all would be our opening balances. Did you note this? Rupees in what? Thousands. Okay, fine. So when I'll make a Jan ka cash budget, no, this will straight away fall into the opening balance column. Correct? Okay. Then we are given with short-term investments. Then we are given with debtors and stocks. So guys, what do we take out from here? The first four over here, they all are current assets. Correct? Yeah. Then next one, trade creditors. Trade creditors, you understand, the creditors that arise because you do trade, normal, routine creditors. Other creditor, you understand. Yes, sir, if trade creditor is arising because of trade, other creditors are arising because of others. Don't conclude something like this. Okay, this simply means what? It simply means outstanding expenses. Okay, people. Dividend due, that is dividend payable, and tax due. So can I say the last four are what? Our current liabilities. Okay, then let's move ahead, guys. Budgeted profit statement. Budgeted means what? Estimate. And a statement showing profit. See, you realize that this is nothing but estimated P&L account. It's an estimated, no? Because see, now the months you see, no? Jan, Feb, March. So it's an estimated P&L account. And I have a very simple question. You all are very smart and very experienced accountants. You've been doing accounting since last at least 3 years, what I understand. So P&L account is always prepared on which basis? I'm going to stop the screen share and ask you people. Now, people, P&L account is always prepared on which basis? Answer question, answer. If you feel accrual, say 1. If you say cash, you say 2. Accrual basis, you understand accrual basis? No, you don't understand. Those who don't understand, I can supply them this water. It is like open chilu par pani mein doob maro. What is accrual basis, guys? See, hello. It is very simple. See, you are given a salary of 11 months. Then you calculate salary of 1 month and add it as an outstanding salary. And then write salary of 12 months. Yes or no? Whether paid or not. Do you record the salary for the one full year in your P&L account? Sure? Right? Okay, fine. So that means this itself is called as which basis? Accrual basis. Getting me? Okay. Okay, people. So yes, I'm going to write over here that this is on which basis? So this is on accrual basis. Okay. So we begin with sales. Okay, it's not written in the question, guys. So always understand that all sales will be always which ones? Credit sales. Okay, always remember. If the question doesn't specify what we consider the sale or purchase. Even if it is a purchase, no, we consider it as what? We consider it as credit sale. Okay, fine. Then coming to cost of sales, you can also write over here. I hope you are writing in your books as well. Huh? Don't just sit idle. Cost of goods sold. I hope you remember my subject, financial management, right? So in our subject, financial management, we interchangeably use these terms. Okay, if you learned costing, if you learned cost sheet, then cost of sales and cost of goods sold is different. But for us, for a financial manager, it's same. Subtracted, you get gross profit. And then all expenses. So this is an estimated values. No? So everything is taken up together and subtracted as a whole. Administrative, selling, distribution expenses, and interest, everything is subtracted, and you arrive at what? Net profit prior to tax means only NPBT. I hope you know NPBT, net profit before tax. Fine. Now that we have one more box, budgeted balances at the end of each month. So can I say these all balances are what? Closing balances. These all balances are what? Closing balances. So this is not fair. You give only 1 month's opening balances and you give 3 months closing balances. My dear Dumbos, closing of January would be opening of February or not? You want me to copy all this over here, first Feb, then copy all the balances from here to here, then first March? What nonsense we're doing, right? We understand this, right? Every closing balance of January would be the opening balance of February. Every closing balance of February would be the opening balance of March. I understand every closing of March will be opening of April, but we don't have to go to April now. We have to prepare cash budget for Jan, Feb, and March. Okay. So you can see the balances, guys. Compare the first box and compare the last box. Why? Because there is the opening balance given and there is a closing balance given. In the terms of contents, I'm not talking about numbers. In the terms of contents, particulars, are they same or there is some difference? In the terms of contents, over here and over here, are they same or there's a difference? You see it to be the absolutely same or the contents are different? Something missing? Only one thing is missing. What is that? Cash bank is missing. Correct now. Hello people. If they give cash bank closing balances also, then what we will find out? We prepare a cash budget, correct? And we find closing balances at the end of each month. If that also they will give, then what we will do? That's why it is missing. That is our answer. Am I clear to this? Sure. Fair enough. So let's continue reading the question part. Yeah, it's not yet over. There's a few things given over here at the end of the question. See, depreciation amounting to 60 rupees is included in the budget expenditure for each month. I can feel everyone is shouting, sir, it's not 60 rupees. Sir, it's 60,000. Good morning, sir. Get up, sir. I know it is 60,000, but we are preparing everything in thousands, my dear friends. So remove that 3 zeros. Okay, we are preparing everything in thousands, no? So remove those 3 zeros, make it 60. Okay, what do you understand about depreciation? Depreciation is a cash expenditure or it's a non-cash expenditure? Answer is simple, sir. It's a non-cash expenditure and it is included in the budgeted expenditure of each month. See, where is the budgeted expenditure of each month? Read this. This is a budgeted expenditure of each month. Correct? Each of these amounts includes what? A depreciation. Absolutely fine when I prepare a P&L account. Correct? But if I'm going to prepare a cash budget, shall we include depreciation in cash budget? Say yes if you say one and no two. Shall we include depreciation in cash budget? No? Sure? Why? Because it's a non-cash expenditure. Correct, Drishti. Right? I can read people, huh? I can get what you say. Yeah. Okay, fine. So, yeah, now the point comes. Capital expenditure amounting to 800 is expected to be incurred during February. Capital expenditure, something like buying fixed asset, say purchase of fixed asset. Okay, when it is going to get incurred in the month of Feb. So we record or we don't record? Yes, sir, we will record. Simple as that. In which month? But in the month of February. Guys, this will lead to inflow of money. Means this will be receipt of cash or this will be payment. Be payment, right? So we'll record this in payment. So I'll just mark it as a P. Fine. Proceeds from sale of plant and equipment, rupees 50 is expected in the month of March. Proceeds from sale of plant and equipment. So we'll sell the plant and equipment. So it will be receipt or it will be payment. It will be receipt. And in the month of March, okay, fine. So from this, what we have to do is we have to prepare a cash budget. Okay, fine. So let's start with that. I hope you have notes with you. Some of you have already shown it to me. So I'll continue. Means I'll take a notes from on my other device so that all the time I need not go on shuffling through the question and answer. Give me a moment, people. Hello. You have physical copy of notes, all of you? And if not physical copy, at least another device on which you can see the notes. Right? Okay, fine. Got it. Okay. I hope you're carrying a calculator. Chalo, people will start. See, we will read the question. If we feel that it's a receipt, we'll record it in receipt. If we feel that it's a payment, we record it in payment. As simple as that. Okay. So let's start. See, the very first. Now, see, there is no standard format that you have to read this first, read that second. Start reading the question and go on putting the things. So in the first box, I come and I see cash in hand, cash at bank on 1st January is 545. Correct. So in the opening balance, January, you write 545. Correct. Okay. Now see, this was the only balance for which we did not have closing balances to compare. Correct. But now when we'll start the next item, that is short-term investment, we have the balances to compare. So we have to be in synchronization. Correct. See, what is the opening balance of short-term investment in the month of January? It is it is 300. Now you scroll or you go into the last box where short-term investment closing balance on 31st January is 700. Did you get it, guys? Hello? Did you get the balances to compare? Right? January opening balance is how much? 300. Correct? And the closing balance is how much? January 700. Yes, Rona got it. Okay. Huh. Now, if you compare this, what does it mean? The investments have increased by 400. Correct, people? How they will increase? Do they grow on tree that they increase as such? No. It means that it's a purchase. Is this conclusion clear to everyone? Right? And if it's a purchase, then it will be receipt or it will be a payment. Payment? It will be a payment? Yes. So we'll record it in payment. So record it in estimated cash payment and say purchase of short-term investment. Make sure that you write 400 in the column of Jan. Correct? And now we will go on comparing like this. See, 31st January closing balance is 700. Means on 1st Feb also it will be 700. But when you see on 28th Feb, that is the end of February, it is dash over there. The balance is nil. So what happens to all that 700 rupees ka investments? Must have been sold out, or we plan to sell it off. When we sell off the investments, we'll receive money. So record it in what? Cash receipts. So here I write sale of short-term investments. Make sure that you record it in. So sorry. Make sure that you record it in correct month, right? We expect the sale in the month of Feb. So make sure that you record it in Feb. Okay. Now from Feb to March, we have to compare. Closing of Feb is nil. Closing of Feb is nil. So opening of March has to be nil. But when you see closing of March, it is 200. So from 0 to 200 means again a purchase. So what you do? You've already written no purchase of short-term investment. In the month of March, you put 200. That's it. Done. Everybody clear till here? The placement and the meaning is understood? Okay. Let's go ahead. So we were in the first box. We used cash and opening balance, short-term investment. Now let's talk about debtors. Let's talk about what? Debtors. See guys, for debtors, now you just cannot go on comparing just as we did for the opening and closing balance. Because what? Because the debtors is a thing which is related to what? Credit sales. So from debtors, what I will write over here, am I going to write credit sales over here? Answer is no. What I'm going to write is collection from debtors. Am I right? In receipts, what we will write? We will write collection from debtors. Correct, people? So how we'll calculate that? So, okay, fine. I'll take you to the debtors account. Okay. See, this is a generalization. Okay. What you see over here, is a generalization of debtors account. Correct, guys? Now you tell me, debtors will always have opening balance. I mean to say debit balance. So write opening debtors over here. What entry do we pass if we make a credit sale? We say debtors to credit sales. So we'll record it over here. If they pay us, we will write cash bank to debtors. So over here, and this is a closing balance. Now students, how would you find this cash bank? So simple, add opening debtors, to that add credit sale, and from that subtract closing debtors. So my dear students, I'm making this as an equation. You can see over here, see, cash received from debtors. Make an equation out of this. See, otherwise, sir, why don't you prepare an account? I would have prepared, but then we have to do this process for how many months? We have to do this process for 3 months. Correct. No? We have to do this process for 3 months. So instead of doing 3 times accounts, let's do one simple thing. Let's get the meaning from it. Okay, fine. It is very simple. Opening debtors plus credit sales minus closing debtors will give us cash received. So we present it in the form of a working note. You can see this. You can make it. I hope by the time I'm talking, you might have prepared it also. So opening debtors, add what? Credit sales less what? Closing debtors. So let's start putting the numbers over here. In January, the opening debtors are 2570. Correct. And for Jan, Feb, March, closing debtors are in the last table, no? So put a minus sign. 2600, 2500, 2350. I hope you all are getting these numbers, right? From the last table. So I keep on repeating from the first table what I got, from the last table what I got. And so what about credit sales? Oh yeah, I told you now in income statement there's a sales no of all the 3 months, and if nothing is specified, it is with sale, credit sales. So copy that. The second box, budgeted profit statement. Take the figures of sales, no? 2100, yeah, 1800, and 1700. Sir, but what about the opening of Feb and March? Is this a question to be asked by a commerce student? So knowledgeable people you are. I'm very sure nobody is asking this question to me. Right? You all are very smart and knowledgeable, no? Sir, actually nobody appreciates us so much. Arey, where am I? Just sarcasm. Okay. Take 2600 over here. Take 2500 over here. Right? Now we all can do plus minus. Let's do. Let's see who completes first. 2570 plus 2100 minus 2600. 2070. 1600 plus 1800 minus 2500. 1900. 2500 plus 1700 minus 250. 1850. Done? I don't want to go on the same page. A little. Yeah, now I can. Working note number 1. 2070 1900 1850. Hello? Have you understood this calculation of debtors, guys? Okay. Thank you. Okay, we will continue then further. Chalo. Where were we? Sir, we are all at our homes. Not like that in the question. We're done with cash. We're done with short-term investment. We're done with debtors. Now we talk about stock. Okay. I'm talking about the first table, stock. Guys, listen. Stock means what? Unsold goods. Related to that, what we'll have to write in the cash budget? See, when it came to debtors, it was sale. When it comes to stock, it is purchase. Correct? So, sir, are we going to write purchases in the cash payments? No, 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 no. We're not going to write purchases. As we wrote collection from debtors, na? So related to goods, related to stock, what I will write over here? Payment to creditors. Correct. Okay. So here I'm going to write payment to creditors. Now almost I could hear people saying, sir, just same as debtors account, sir. Make it, sir. I agree with you guys. But see, there is something which you must now understand. See, look at this note, working note number 2. Absolutely right. You have to work out cash paid to creditors, and I made it very clear. Trade creditors, because other creditors are outstanding expense. Dear students, see, this is what I've already written. opening creditors plus credit purchases minus closing creditors will give me cash paid to creditors. Absolutely correct. Okay, but give me a moment. When we read the question, no people, when we read the question over here, see this. I'll zoom it for you people. Okay, from sales, what is subtracted? Cost of sales is subtracted and not purchases. Correct. So first, what we will have to do, we will have to find purchases, some extra work for us. Okay, and that's why you see some few things were written over here. You can read this written at the end. See, we want purchases, correct? But we are given with what? Cost of goods sold. Absolutely fine. We can write the formula of cost of goods sold. I hope you are aware of this formula. Opening stock plus purchases minus closing stock gives you cost of goods sold. People, say one if you know this formula. Say one if you know this formula. You know this formula. Everybody knows this formula. Okay, thank you. Fine. So now what we can do? We just have to manipulate. Now, so yes, sir, we are very good at that. Manipulate means we have to little of maths. Hello, little of maths you can manage. No, I understand that. You can shift this opening stock on this side, it becomes minus opening stock. You can shift this minus closing stock on right hand side, it becomes plus closing stock. So who is left alone on the left hand side? Purchases. So we got an equation. Purchases is equal to COGS minus opening stock plus closing stock. Whatever but I am doing, I know you're utilizing this time to write it down, but keep listening to me also. So now first we'll have to solve this part, guys. First we'll have to solve this part. Okay, so we will complete this part. No, we have no choice. First we'll have to complete this part and then post the answer of purchases in the upper part of the note, correct? Yeah. So let's start. COGS means only cost of sales, na guys. It is the same for us. COGS is only nothing but, sir, cost of sales. So now we can do copy paste from our question, correct? So in question, cost of sales is 1635, 1405, 1330. Okay. Opening stock, where do you get it? Of January, I'm talking about January. January opening stock would be in the first box, first table. It is 1300. Okay, and how about the closing balances of all the 3 months? So last table, it is given, no, all the balances. Yes, we'll copy that. So 1200, 1100, and 1000. And people, the process is same, no? Closing of this month would become opening over here. So put 1200 over here and put this 1100 over here, right? And do all the plus minuses, no? So 1635 minus 1300 plus 1200, 1535 purchases. Okay, then 1405 minus 1200 plus 1100, 1305, 1330 minus 1100 plus 1000, 1230. Okay, and then what we will do, we will all these purchases will take over here, correct? These all values, no? Purchases we have to take in the upper column, correct? Okay, so let's do that. We'll copy these purchases over here. 1535, 1305, 1230. And how about these opening creditors? The same way we got stock, no? But students, everybody doing workings on their own, remember, here we will take only what? Here we will take only trade creditors, guys. Hello, correct? Other creditors I have already told you. That means what? That means outstanding expenses. Not going to take that. Okay. Sure. Anyways, we'll start. So opening creditors of January. Trade creditors I can see 2110. Then for again no Feb, Jan, Feb, March, all trade creditors closing balances are in the lower table. The last one. 2000. Then 1950 and 1900. Okay, and then same now. Closing of Jan becomes opening of Feb, and closing of Feb becomes opening of March. Right? That's it. Okay, so you can start calculating then. 110 plus 1535 minus 2000. 1645. 2000 plus 1305 minus 1950. 1355. 1950 plus 1230 minus 1280. Guys, these are my final figures, right? Hope you understand this. Right? See, this is what we will put where we will put in our cash budget, correct? So carry these figures now. 1645, 135. 1645, 1355, 1280. Yes, people, absolutely clear till here. Payment of trade creditors is understood. Thank you, thank you. Okay, fine then. We'll continue. Are you done writing till here? Great. Good going, guys. Thank you so much for being so cooperative. Yeah. So let's proceed further. See, we'll follow our question now. In our question, we are done till trade creditors. First box, we are done up to what? Trade creditors. Below the trade creditors, what next we have is other creditors. And see what I told you, other creditors means outstanding expenses. People tell me, when I'm preparing cash budget, will I be writing outstanding expenses in cash budget? No. Will I be writing accrued expenses in cash budget? No. Will I be writing expenses paid in the cash budget? Yes, 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 yes. What are the only expenses? See, it's a long name given in the budgeted P&L. Sales, cost of sales, GP. Below that, admin, selling, distribution, and interest. Right. So that is what I want to pay, and that's what I will write over here. Admin, comma, selling and distribution expenses, and what? Interest. Paid, but people paid ones. The amount which I'm actually going to pay is what I'll have to record over here. Now, how that will happen? Okay, I repeat my words. What are we going to write? Outstanding expenses over here? Answer is no. Are we going to write accrued expenses over here? Answer is no. What are we going to write? We are going to write expenses which are paid. Correct. So see, as we did a note for creditors now, so we are going to talk about some cash paid to administration, selling and distribution, and interest. So there's some explanation space, which means that it needs some explanation. Okay. So now, see guys, whenever we prepare a P&L account, okay, those who are telling me ki nahi sir, we don't understand what is accrual. So you actually know that this is accrual, but you don't know that you know. Okay. So when you prepare a P&L account, which is always prepared on accrual basis, correct? Okay. So how you write it? See, I'll show you. You write over here. If you're not aware, I'll tell you. You write over here expenses paid. Then you adjust opening outstanding with it, and you adjust closing outstanding. So we're not very sure about the signs. That I will tell you. No, opening outstanding. So what we okay? I'll take your opinion first, right? Public opinion should be taken. People, what we do with opening outstanding? We add or we subtract. If we add or we subtract opening outstanding. So we may multiply also, we may divide also. We can do anything. 4 possibilities. Subtract, Mohsin Paka, sure. Asim, I cannot read your full name. Asima. Okay. See, I could read, I could guess that. Okay. So Asima is going to add, Mohsin, you subtract. So do one thing, no? Janavi, you divide, and Aishwarya, Swati, Aishwarya, you multiply. Somebody takes square root also. Somebody do logarithm, tan, cos, theta. Right? What? Jay is saying subtract. Dear students, it's an opening outstanding. All of you listen to me now. Dear student, it's an opening outstanding amount. Opening outstanding means what? It's the amount of this year or of last year? Last year, which we are paying in this year, correct? Does it belong to this year? No. So even if you paid in this year, remove it from the expenses of this year. So what is to be done? Subtract. Okay. Yes. So opening outstanding would be subtracted. Sir, now we are expert at sir. Now we know what is to be done with closing outstanding. Because sir, one sign you give no, others we can give just like that. We add closing outstanding. Students, with the same logic, that even though it is not paid now, the amount belongs to this year. And if I want to find the correct profits of this year over here, I must record each and every expenditure of this year, whether paid or not. Right? And then after you adjust these amounts, what you get over here is a accrued expenditure. Correct? Correct me? Right? Now you tell me what we want to write in cash budget. Do we want to write the accrued one or the paid one? And the answer is the paid one. Correct? We want to write the paid one, but we know the accrued one from P&L. Sir, how come? Correct? P&L is given in the question. No. Estimated P&L account is given in the question. So what we know is we know this. So how we will find this? Simple. Go reverse. From here you go reverse. So go reverse means array in the accrued amount you had earlier added closing outstanding. What you will do now? Subtract it. Earlier you had subtracted opening outstanding. What will you do now? Add it back. Where would you reach? You would reach expenses paid. Did you understand, guys? Sure. Okay. Okay. Thank you. Yeah. So now this is what we need to talk. Okay. Fine. So now, but some few things additional you will see over here, right? Sir, you told us you will do like this in accrued amount. You will add opening outstanding. You will subtract closing outstanding. You will reach expenses paid. But sir, you cheated us. You added a few things. Now what do I do, my friends? In P&L, what we are told, every accrued amount is including depreciation. So what I'll have to do, I'll have to remove the depreciation. In cash budget, can I take depreciation? In P&L, depreciation is correct. But in cash budget, how do I take depreciation? So what we are doing? Removing it. So this will be our final presentation. Okay. Hello, students. Hey, don't do this in exam, huh? Right? This was only for you. You want to distribute knowledge like this to the examiner or what? No. This is only for you. Huh? Don't do this in exam. Okay. What you have to do in exam is this. Okay. Yeah. So we'll start filling up these amounts. Accrued amount including depreciation. Guys, I hope you select correct numbers. January, it is 315. February, it is 270. And March, it is 255. Okay. Subtract depreciation. What is written at the end of the question? In each month's expenditure, there is a depreciation of 60 rupees, people. So remove it, no? Minus 60, minus 60, minus 60. Done. Okay. So I'll actually remove, no? 315 minus 60 gives me 255. This has to be 210. This has to be 195. Okay. Then as usual, opening outstanding expenses means those other creditors, people. Correct? Same thing over here. So what is the other creditor for the month of Jan? Opening month of Jan? Other creditors are 200, right? I hope you got it. Okay. Then as usual, Jan, Feb, March will copy closing balances from the last table. So it is actually same in every month. And then get it over here. Sir, you wasted our time, sir. It is coming same, sir. 55, 210, 190. So next time onwards, no, we're not going to do all this nonsense, opening outstanding, closing outstanding. Wasted our time. We will be running short of time in the exam. So what say, guys, is this necessary to do this opening outstanding, closing outstanding in all the questions? Yes. Why it was okay to not to do in this question? You understand? Because it is same. Even if one figure is different, your accrued amount and paid amounts are going to be different. Correct, people? So this was not a waste of time. This was an addition to our information. Correct? So you can now copy this in your cash budget. These final amounts. This is our answer. Okay, I was just doing few things because I was expecting that you would be preparing this all. So let's go to the question now. I mean to say the solution now. We'll fill up over here now. Yeah. 255, 210 and 195, correct? To cross check. 255, 210 and 195. Okay, so Dantilia, see in the process what happened in the first box we have reached till other creditors. After that we have dividend due. Now pay attention, guys. Dividend due means what? Dividend payable. What is the payable at the beginning of January? Payable at the beginning of January is 485, correct? Then go to the last table, correct? What is the payable at the end of January? Is it same? 485 only? Yes, sir. That means what? Are we paying? Are we going to pay in the month of January? Answer is no. Okay. Closing of January is 485. Means opening of Feb would be 485. But what do you see in the closing of Feb? It is nil, right, people? So we are expecting to pay this dividend in which month? In February, right? So right over here, dividend payment, and it has to go in the month of Feb, huh, guys. 485. I hope dividend paid point is understood. After that, we'll see tax due. See, January opening 320, January closing 320. Are you paying in January? No. February closing also 320. Are you paying in February? Answer is no. March closing is also 320. So tell me, students, in all these 3 months, Jan, Feb, and March, do we have any plan to pay our outstanding tax? Answer is no. Simple. So if you're not going to pay, you're not going to write, because this is not a P&L account. This is a cash budget. Okay. So in this process, can I say my first box, first part of the first table of the question, utilized in full? Let's take a look at the second part. Have we used the sales? Sir, we have not written sales anywhere in the cash budget. I'm not saying that whether it is written in cash budget. Have we utilized while calculating debtors? Yes. Have we used the information of cost of sales? Yes. Do we need a gross profit to be written in cash budget? No. See, no profit amount will come. Now, this is what cash. Gross profit will not come. Have we used that administrative selling and distribution after that? Yes. Net profit prior to tax, same logic, GP won't come, NP won't come. Okay. All the budgeted balances given in the last table have we utilized? Answer is yes. Okay. So below the information, depreciation, have we utilized? See, I understand depreciation won't come in this solution, but have we utilized wherever required? Answer is yes. What is left now? Simple, people. Capital expenditure to be incurred in February. Let's write in payment. Capital expenditure. February it is 800. True. And proceeds from sale of plant and equipment 50 in the month of March. Proceeds means receipts. Huh? So right over here. Sale of what? Plant and equipment. Just 1 minute. Just let me light it. In the month of March is 50. Yeah, you had raised hand, Restri. Hey, Restri had raised hand, but she removed it. Okay. If you have to ask anything, fair enough. Yeah, tell me.
Sir, don't we write the stock in the current assets? Did we miss stock or we don't
Correct.
write?
Stock will go in current assets, no?
Yeah, so
What we are preparing? We are preparing balance
okay,
sheet.
cash budget. Okay.
See, of the whole things, no? See, related to stock, what we concluded, related to stock, what is going to come over here? Payment to creditors. So have we included that? Yes. As simple as that. See, whatever is a cash receipt and cash payment we have considered over here. See, when it comes to even writing the expenses, administration, selling, distribution expenses, and interest, we are not considering the accrued amount, neither the outstanding amount. We are considering only which amount, the amount which is actually paid one. Right there, right, friends? Hope your doubt is cleared. Okay, so we are done with it. Actually, now we have to start closing, right? People, we have to start closing. Okay, so let's do that. Let's close this. Let's take totals. So, what I told you, how you have to take the totals? You have to take the totals month-wise. And please don't forget the opening balance. Some people forget this opening balance and the examiner loves such students. Why? Because everything goes wrong from this first total itself. Don't do that. This total is 2615. 400 plus 1645 plus 255. This is 2300. So balance would be 315. Correct, people? And now you know that what we will do, we will take this balance over here. Correct? Without fail, people, without fail. This has to come over here. So 315, okay, plus 700 plus 1900. This is 2915. Then 1355 plus 210 plus 485 plus 800. 2850. Balance is 65. Okay, I remind you again, people, take this 65 without fail over here. Right? Because one balance you forget, no, and you're gone. Sometimes, you know what? People keep working, but then listen to me also. People, you know what? They come to me telling, sir, I do silly mistakes. And somehow they're proud of it. I tell them mistakes are silly only. Consequences are mountains, disastrous. Okay. Driving a car, forget to apply brake. Silly mistake. Yeah. Or you lose your life. So don't do such things. I'm calculating with you, so I presume that you all would have reached these numbers. Have you all reached these numbers? Okay, great. Have you all understood the way we've solved it? Absolutely. Okay. Okay. Drishta, your doubt is clear, or still have something to ask? All clear now? Okay, fine. Yes, people. Anybody else? Anything in this question? Pretty clear? Okay. Anybody wants to take photo? Janavi has to ask something. Unmuted.
Sir, why COGS is equal to cost of sales in FM? In financial management, why we have to take cost of sales is equal to cost of goods sold?
See, there is a way of preparing. Have you learned cost sheet?
Yes, sir, yes.
Okay, fine. When you learn cost sheet, no. See, cost of sales means certain thing in the cost sheet, and cost of goods sold means certain thing in the cost sheet. Cost of sales comes at the end, right?
Yes, sir.
Right. And here, what we do is from sales we subtract cost of goods sold, we arrive at gross profit.
Yes.
After gross profit, we subtract all expenses in P&L, and we don't arrive at anything else, but we arrive directly at net profit.
Yes, sir.
So there is a difference in the presentation. We don't have any term separately called as cost of sales in FM.
Okay, sir.
So what do we do? Sometimes we say cost of sales, sometimes we say cost of goods sold. And it
Yes,
doesn't
sir.
matter. In cost sheet, when you first go on adding few expenses, you call it prime cost.
Yes.
Then you arrive at factory cost.
Yes, sir.
You getting my point? So
Yes, sir. Yes.
you need a few more names when it comes to cost sheet. But when it comes to FM and when it comes to preparing a vertical P&L, we will discuss this at length when we talk about accounting ratios.
Okay, sir.
So we'll be presenting the horizontal trading P&L you make now, we'll put it in the vertical format. And then you'll realize that we don't need a separate term called as cost of sales anywhere. So in FM, we are okay. We say sometimes we call it cost of goods sold, sometimes we call it cost of sales. Doesn't matter.
Okay, sir.
Fine. So your doubt would be I hope this helps your current requirement.
Yes, sir. Yes.
Yeah.
Yes, sir.
But this will be further explained when we talk about what accounting ratios. There we will talk about at length about the vertical statements.
Okay, sir. Got it, sir. Thank you, sir.
You could go mute. I'll put down your hand. Leave me in confusion otherwise. Okay, people. So since that you've understood everything, I assume that. Okay. We'll go to the next question. Okay. Yeah. We'll talk about question number 2. Okay. Let's start. Come on. Ram, Arun, and Kalish, chartered accountants, are partners of the firm Ranka Associates. Okay. Now, see people, they are chartered accountants now. So what they will do? They'll do what chartered accountants should do, correct? They'll specialize in what? Area of internal and corporate audit. Guys, has your audit started? No. You know what is audit? You don't know. You know, you never asked anyone that what you do after becoming chartered accountant. You play marbles. After becoming chartered accountants, you do audit, no? Okay, fine, sir. We don't know the subject, but in general, we know now that what is audit? Audit is checking the books of accounts. Fair enough. I'm not going to start with audit, right? So, I just want to make sure that you know that audit is all about checking the books of accounts. Okay, fine. So, where they specialize in internal and corporate audit. These are the types of audit. The audit sir will explain it further. Then they specialize in what? Taxation. Means, they will help their clients know in calculating tax and paying tax, right? And project consultancy, you might find this a slightly new term. So what is this project consultancy? See, once you become chartered accountant, you'll be actually having all financial details of your client. Correct? Client wants to start a new business, he may approach you. Will you please help me find out whether this business will be successful or not, right? So you call it, okay, you might have heard this name. You might have heard this word, feasibility study, right? So we will charge him, we'll ask him to pay the fees, and we will do some feasibility study and try to give him some suggestions that whether the project would be successful or not, right? And he will not give guarantee, right? He will give you suggestions, because tomorrow you don't want him to hold your collar and you told that the project would be successful and it failed. It is just a suggestion. But then what? In these 3 areas, no, internal and corporate audit, taxation, and what? Project consultancy is what we will make our money. The revenue of the firm is steadily increasing over the years, and for the year they decided to do what? Operate a budgetary control system to monitor profitability as well as cash movement. So a cash movement for a budgetary control is nothing but what? Prepare a cash budget. Okay. To start with, the following forecast of profit for the first 6 months was given to you. Oh, sir, last question was 3 months. Now this is for 6 months. At least read, people. This is all rupees in what? Thousands. Correct? Note this, huh? Yeah. Projected profit forecast. Hello, students. In the last question, it was budgeted. What was there in the last? What was the words? What were the words used in the last question? Budgeted profit statement. Now what they are calling it? Projected profit forecast. Dear students, by all means it is the same thing, right? What it is. This is an estimated P&L account. What is this? This is an estimated P&L account for all the 6 months ending 30th September. Okay, fine. Income. Internal and corporate audit. People, this is one word. Huh? This is one big word. Oh, by mistake, it has been entered and gone into the next line. This is one word. Then taxation. They are collecting taxes from the people. Hello, it's only government which is allowed. Huh? My dear students, we are providing consultancy to the client and we charge them taxation fees. And don't think that we collect taxes from someone. We don't collect taxes. That authority is only with the government. And then we charge project consultancy fees. So these are our sources of income. This only would be there, na? Just now, hello, just now we saw na. Just now we saw that there are three possibilities: internal and corporate audit fees, taxation fee, and project consultancy. So that's what you see in the income, right? Okay, expenses, depreciation. Guys, tell me, is it correct to have depreciation here? If you say yes, one. If you say no, two. Those who say two, okay. From my side, reaction. Okay, this is tight slap for those who say two. Attack. Hello, what is this? Dear students, what is this? This is a P&L. My question was very clear. Is it okay to have depreciation here in P&L? Hello, good morning. Good morning, Hyderabad. Is it okay to have depreciation here? Answer is yes. Sir, we were talking about cash budget, and yes, don't worry, you all are right. We will ignore in cash budget, correct? I strongly recommend, I can recommend from 1,000 kilometers, I can just recommend. How can I make sure that you write it? Ignore in cash budget. Please write it. Sir, it's very simple. We'll do it, sir. You know what happens? Today, you will, sir, very simple. What to write? After 1 week, sir, very simple. What to write? After 1 month, okay, we need some time for revision. After 3 months, who's Sandeep, sir? What is FM? Who taught this nonsense cash budget? When this situation comes, no? Right? After 3 months, when you don't even remember the name of the topic and name of the professor who taught you, that time all these markings make you recollect. This is a selfish motive. If these markings are there in the book, no, this is not for you, this is for me. You'll at least remember that this topic was taught by one person like me. Yeah. Rent we pay in cash, huh? It's fine. Stipend, or people, those who complete inter, no, even one group, they work as an article assistant, no, articleship they do, no, so they get paid stipend. This is a CA firm, so for the articled assistant it might be income, but for a CA firm it has to be a expenditure. Telephone everyone knows, right? Office expenses and salaries, lot of expenses you can see. Training, travel, conveyance. Typical chartered accountancy firms, a list of expenses. Travel and conveyance, partners and assistant salary, the total is B, and then the profit is A minus B. Okay, and then some information is given that how the payments, because see people, I'll again make you, like Cortana has to be here. I'll again make you recollect what, that this is a P&L account, so it has to be on which basis? Accrued basis, na? It has to be on which basis? Accrued basis, correct? So guys, we need to know how they are to be paid, and that's what is given in all these points. Now below that you see what they are asking for. Prepare a cash budget for each of the 3 months of what? July, August and September. So you have to prepare a cash budget only for 3 months. So relax, right? They might have given you income statement of 6 months, but cash budget is only for 3 months, and suggest to improvements that could smoothen the cash position as on 30th September. Guys, this we can answer only after what? Only after we prepare a cash budget and we have closing balances. Once we have closing balances of July, August, and September, we will come to know whether they are in a good position or whether they're running short of money. And then we can give suggestions. See, listen to me. What you can see over here, a lot of payments, no, and the receipts are only 3. So whenever we'll make the format, no, you know what is going to happen? We'll leave one full page only formatting. See, big space means what? What I mean to say here. Here, see, I have left 3 lines. Why only 3 lines? Because we have only 3 sources of income, correct? Corporate and internal audit fees, taxation fees, and project consultancy. So left 3 lines. Here in payments, you leave at least 12 lines. Huh? At least 12 lines. Okay. 12, 13 is also fine, but don't leave less than that. Are you ready with the setup? No? Okay. Acha, people listen. We're supposed to take some 10 minutes break now, right? So let's do one thing. Let's resume at 9:40. Okay? I'll keep it on the screen. You also don't quit the meeting. What you all do, just turn off your camera, video, and sound. So as such, it is mute. And we'll resume. Be there, but we'll resume sharp at 9:40. Okay? Chalo people, everyone be back to work. आ गए क्या सब लोग? Is everyone there? Come on people, come on, come on. Okay, let us start. Let us start. Yeah. So now we'll go very specifically through the question. Just let me take out my question. Yeah. I hope everyone is here. It's not just that their laptops or PCs are on, but they are also present over here, right? Okay. And please, guys, majority of you should turn your cameras, videos on. Well, know that you may be removed out of the meeting if you don't so, and then 2-3 days you won't be able to join back, right? Sure, I'll share the screen and we will continue. So this is the thing that we have to fill up, right? Recording is on, everything is as usual. What about my video? Is it pinned? Just checking everything, nothing else. It is okay. So we are good to go. Fine. Let's start with it. So we'll go through all the points one by one. Okay. The following information is significant. I'm on page number 163. These all points, they tell you about how the payments are done. See the first point. Rent is payable in advance on the last day of the previous quarter. Okay. Quarter means what? Quarter means 3 months, right? So guys, let me take you to the question. See, what is told about rent now? The first quarter of the year would be, I mean to say financial year, would be April, May, June. Correct? The first quarter of the financial year would be April, May, June. But prior to this, what will be the quarter? Jan, Feb, March. What is told? How the rent of these 3 months should be paid? It should be paid on the last day of the previous quarter. So the previous quarter is Jan, Feb, March, and its last day would be what, you tell me? 31st March. Everybody agrees on this. So see, understand, as simple as that. Suppose you are my tenant. You are operating your business in my premises. So I tell you, see, hello, Mr. Tenant, April, May, June, no, you have to pay in advance. Huh? And don't come on 1st April. Don't try to fool me. Come on 31st March and pay for April, May, June. Then only from April, May, June, you can use my place. Very normal, na? I'm a owner of the place. You are the tenant. So I tell you like this. Okay, before you start using my space on April, May, June, no, you have to pay in on 31st March. So what will be the next quarter? July, August, September. Now, when I'm going to ask you to pay for July, August, September, 30th June. Correct, people? I hope you've understood this pattern of payment of rent. Understood, no? Okay, okay. Yeah. Now you tell me, we are preparing cash budget for which months? We are preparing cash budget for July, August, September, in which we will write payments of July, August, September only. Okay, now you tell me, after July, August, September, the next quarter would be OND. October, November, December. So for October, November, December, I'll tell you that, see, if you want to use my premises in October, November, December, you'll have to pay me on 30th September. Correct, people? Understand? So now in my cash budget, I'll be recording only in the month of September, no? For the 3 months. So we will continue 5, 5 and 5. So total 15. Every month it is 5 now. So even for October, November, December, it will be 5, 5, 5. So it will be 15. Which month we will pay? We will pay in the month of September. Right? So go to solution part. In the payments, you first write rent. Okay, and make it clear for October, November, and December. Yes, we'll pay in the month of September. So 15 will appear in September. If you have understood, do nothing. If you have not, just raise the hand. And if you don't raise the hand, I'll understand that you have understood. Yes, Priti, you can ask.
Sir, I did not got that rent part.
What can you read that? What is written in the point?
Rent is payable in advance on the last day of previous quarter.
You understand what is a quarter?
Yeah.
What is that?
Before 3 months.
Sorry?
For 3 months.
A quarter means 3 months.
Yeah.
Correct. So July, August, September is a quarter, right?
Hmm.
You understand the previous quarter of that? Which 3 months come before July, August, September? You're checking
April,
the
May,
calendar.
June.
April, May, June,
April,
right?
May, June.
Right. Now, what is the last day of April, May, June?
30 June.
Sabas. Absolutely right. Rent is payable in advance on the last day of the previous quarter. As simple as that. So for July, August, September, we'll pay on.
Okay, 30 September.
Like July, August, September, we'll pay on.
30 June.
Correct. After July, August, September, you will pay for which quarter?
30 September. Okay, October, November, December.
Answer my question. I ask you what is your name. Don't tell me I stay in Hyderabad. After July, August, September, which quarter?
October, November, December.
Don't you start crying over.
October, November, December, sir.
Correct, right. Now, for October, November, December, when will you pay?
30 September.
I hope you have understood.
Okay.
Go silent. And put down your hand as well. Okay, so now let's continue. Stipend will be paid in the same month. Guys, you understand? Same month. April, same month is April. May ka same month is May. June, same month is June. July, same month is July, and so on. So you just copy the amounts, no stipend. What is the amount in July? 15. Every month is the same. 15, 15, 15. So put 15, 15, 15. Okay. Then, okay. Now after this, no people, I have to explain you for the telephone. See what is written in telephone. What is written in telephone? Telephone will be paid every 2 months in arrears. Now, just now we read about stipend, and what we said, if you say same month, na, if you say same month, so how it will happen, sir? It will happen something like this. April expenses paid in April. Wow, sir, what an addition to our knowledge. May expenses, sir, it is difficult, but we will manage to answer. Paid in May. Don't take me that seriously. Nobody. Same month. Okay. Now, if I say 1 month in arrear, if I say what? 1 month in arrear. Now you tell me April expenses paid in what? Paid in? What is this? You understand? High five. 5th month. May. Right? I have solution to all the communication issues. Everyone gets this? 1 month in arrear, everyone gets it? Okay, fine. So I'll say over here, paid in May. May expenses paid in clear to this? Okay. Paid in what? June. Fine. Last question in this series. Now I say 2 months in arrear. So now what will happen? April expenses paid in June. 2 months, now in 2 months in arrears. And May expenses paid in July. Do you all agree to this? Sure, absolutely sure. Okay, fine. Now, people, what is given to us in question? Why did I write so much? Just that I was checking whether my pen is working properly or not? No. The reason to write so much is the next point. Point C. See what is written. Telephone expenses will be paid every 2 months in arrears. And the moment I read this line, You know what strikes in my mind? It strikes this last one. 2 months in arrears. So April I will pay in June and May I will pay in July. Correct? Normally this is a normal interpretation of 2 months in arrears. But what you read over here is against this. Okay, what is written over here? April and May will be paid in June, and this is surprising. Yes, I know. This is surprising. This is what they are calling as 2 months in arrears. Guys, I hope you're listening to me very carefully. Hello? They're here. Everyone is here. Surviving, breathing successfully. Yeah. Okay. So see, what information we are given over here is in slight clash of our common sense. Have you anytime read those beautiful lines? Rule number 1, boss is always right. Rule number 2, when boss is wrong, what to do? See rule number 1, which says boss is always right. So who's the boss? ICAI. Correct? What is given in the question? Though the wording say that every 2 months in arrear, but they want you to make the 2 months in arrear payment in a particular manner. The 2 months in arrear over here means April and May to be paid in June, and not the logical conclusion which we draw just now. Not like this. Not like this. Okay, see, so why like this? April and May paid in June. You know what? I can give you a justification. It's not that it's an institute exam question. I see exam question, and you know when this question came into it. Now listen to me, guys, very carefully. When this question came into the exam, no, that time our government telephone service providers. I hope you have BSNL at your place. I stay in Mumbai, so I have MTNL over here. They used to charge bill like this. Actually they used to charge bill like this. Means what? In April you use the service. In May till 31st May you use the service, and then they will send you the bill in 2-3 days. Maybe 3rd or 4th June they'll send you the bill, and they'll ask you to clear it by 15th or 16th of June. So that is why it is over here. Otherwise 2 months in arrears is what you see in screen right now. April is paid in June and May is paid in July. That is a normal understanding of 2 months in arrears. Everybody clear to what I said? Right, guys? Yes. So we'll continue, but then we will have to respect the question, correct? And we will accordingly pay in our telephone bill over here. So let's continue making telephone expenses payment. Okay. Now see how it will happen. April and May will be paid in June. So in the month of June, you have cleared your bill for April and May. Now even the company will follow their system. So after April and May, for the next 2 months, they will send a collective bill. After April and May, what comes? June and July. Correct? Which they will ask you to clear in which one? In the next month, that is August. So August comes in our cash budget. Yes, it is there. So in August, I will pay for the month of June and July. Check out the bills of June and July. June telephone bill is 8 in my book. It has to be same in your book also. And July it is 9. So I'll be paying 8 plus 9 as 17 in the month of August. Correct? So till July the bill is cleared. After that, what will happen? After that, August and September bill will come. You're absolutely right. But August and September would be payable in which one? It will be payable in October. Are we making cash budget for October? Answer is no. So it won't come. So that's it. The end of this. Okay. After telephone, next point, D. Office expenses and salaries will be paid in the following month. Guys, following month is what is this? 1 month in arrear. So April paid in May, May paid in June, and so on. And we are preparing it for July, August, and September. So respect that, correct? So for July, August, and September, you will write office expenses. Okay. So get into the question. Now see, in the month of July, you will pay for June, no? 1 month in arrear, na? So copy from June, no? What is the June office expenses? June office expenses are 50. You got my point? June would be paid in July, 1 month in arrear. Correct? So in July, the payment will be for expenses of June. After that, July expenses are how much? 35. So basically, no, you have to copy all those three expenses in a line, 50, 35, and 40. If anybody has a doubt, then only raise the hand. If you have understood office expenses, salaries payable in next month, so June figure you have written in July, July figure you have written in August, August figures you have written in September. That's it. Then don't raise your hand. Travel and training, next point. Travel and training to be paid in the same month. Guys, there are two headings over there. After office expenses, we have training. They are to be paid in same month, no? So what to do? Simply copy for the 3 months. July, August, September, just copy. So what are the figures of July, August, September? Training, 10, 12, 13. 10, 12, 13, right? And after that, travel and conveyance, right? That as well. Yeah, travel and conveyance is 14, 15, 15. Okay, done. Okay, what is next point told in the question after travel? That partners and assistant salaries will be paid in the following month, just like your office expenses, right? So in the following month, the moment you say following month, you know, in the month of July, you will pay for June. So June, July, August, you just copy now. If you have understood, don't raise your hand. If you're not, then only raise your hand. So I understand that you've understood this. So we'll move to next point. The firm is planning to invest a sum of rupees 50. Yeah, guys, hello. It's all in rupees in thousands, so remove 3 zeros. The firm is planning to invest a sum of 50 in July for acquiring a computer. So we are also estimating only now. So right over here. Purchase of computer. Which month? July 50. Yes, Drishti.
Sir, partners and assistant salary, it's in the following month, right? So won't it be 35,
Sorry.
35 and 40?
Sorry.
The partners and assistant salary,
Uh-huh. Achha, I think I've copied a wrong amount.
won't it be
35, 40.
35, 40?
35, 35, 40, no? This has to be. Richa. This is 35. I'm trying to erase it, but somehow it is not going. See what is told about partners and assistant salary. It is payable in the next month. Na? So June would be paid in July. That is 35. July amount is how much? 35. That will be paid in August. And August amount is how much? 40. That will be paid in September. Yeah. Thank you. We were coming to next point. We have written purchase of computer. Yes. Point number H. Firm expects to pay self-assessment tax of 5. So it's a payment of tax. It is called as self-assessment tax in the month of August, that is 5 rupees. It is always fair that you don't know what is a self-assessment tax, but it is some kind of payment of tax. So should you explain? Actually not. You will learn this in taxation, but then you will feel like, something I'm not knowing and I'm still writing. Guys, in India, we follow self-assessment tax. Means what? Once the financial year ends, no, on 31st March, I calculate my own tax and I make a payment. That is called as a self. It's myself. Assessment means I calculate and I pay my tax. So it is called a self-assessment tax. And also there is some paying of advance tax in August. Now you would ask me, sir, then what is advance tax? It is a tax paid in advance. As I explained to financial management, it is the management of finance. Advance tax is a tax paid in advance. So people don't normally pay the tax. Why they will pay advance tax? There are some regulations, rules and regulations which you have to follow. If your taxable income crosses a certain limit, you have to start paying advance tax. That is more than enough to know right now, right? You have taxation as a subject. Next, the firm is planning to open a branch and spend 20 rupees in September. Fine, branch opening expenses we can write. In which month? September. 20 rupees. Okay. Then let's move to point J. Collection of fees. Internal and corporate audit fees will be collected in the following month. Okay. So see, guys. Okay, I'll show you the question. See, these are the corporate fees of April. April will be collected in May. May will be collected in June. June would be collected in July. July would be collected in August. August would be collected in September. Right, people? Basically, it is all same. No, so it doesn't matter much. Right? So let's write over here. Now in our incomes, correct? What is that? Internal public corporate audit fees. Okay. Internal public corporate audit fees. And every month it is going to come same 60, 60, and 60. People done till here? Okay, let's move on. See the next point, what it says, taxation, sorry, how the taxation is going to get collected. See, 50% in the same month and 50% in the following month. Oh wow, what is this? You understood what I said? We're going to help people with taxation consultancy, correct? You're going to help people with taxation consultancy, for which you're going to charge them what? You're going to charge them fees, right? We are not going to collect tax. I'm telling again and again, right? We are not government to collect taxes. We'll help people file their tax returns. We'll help people pay their taxes, for which we will charge them taxation fees. Okay. Yes, people. So now what is told about taxation fees? Whatever service you are providing, no, half the fees will collect in the same month. Right? So if I give taxation services in the month of June, half the amount I will charge them in the month of June, right? And half the amount I'll charge them in the month of July. Did you all understand that? Right, people? Okay. So how we will present? Okay, listen, I will show you how to present. Simple presentation. Working note 1, collection of taxation fees. Guys, again I repeat, this all thing that I have written now, this is only for you. Examiner doesn't need much of knowledge like this, right? He already has it. So accrued fees as for P&L. Okay, sir, our cash budget is only for 3 months. Absolutely, I agree with you, but half of June will come in July also, no? So I'm going to write from June. So what are our taxation fees of June? As per P&L, it is 40. Yeah. Then it is 50. Then again 40. And then 60. Right, people? Yes. See what is going to happen. Half of this of 40, no, that is 20, will come in June itself. The remaining 20 will come in the next one, that is July. Everybody understands this, right? In case you don't, then raise your hand. Otherwise, it's okay. July half. 25 will come in July itself. But the remaining 25, the client will give in August. Correct? The fees of August, 40. Half of it will come in August. Remaining half will the client will pay us in September. Achha, what about this September ka 60? Out of this people, 30 will come in September, then the rest will go in October. Let it go. Our concern is what? Our concern is just 3 months. Am I right? Our concern is just 3 months. So how much you receive in these 3 months is a total of what you see in the box. So how much you will actually receive in cash in the month of July? In the cash in the month of July, you will receive 45. Correct? 25 of the July itself and 20 of the past month, 45 rupees cash taxation fees you will receive in the month of July. Similarly, 45 you will receive in the month of August and 50 you will receive in the month of September. I hope all my students have understood this. What say people? You've understood the taxation fee overflowing from one month to the other month, right? Okay. Fine. So now we can copy this now. Taxation fee working note number 1, 45, 45, 50. $45, 45, 50. Right, people? Is that done? Okay, so let's move to the next point. See what says the next point. The next point says that means the same point J. Still one statement is left. Consultancy charge is normally received after 2 months. Normally, look guys, now how the normal things happen. After 2 months means normally things happen like this. Right? This is what we discussed now. After 2 months means normally this happens like this. Telephone was an exception. Telephone was an exception, but otherwise, normally 2 months means April will be received in June, May will be received in July, and so on, right? So now how we will receive our project consultancy fees. So guys, see this amount of May. This amount of May, na 50 would be received in July after 2 months. This amount of June would be received in August, and the amount of July would be received in September. Everybody understands this after 2 months, correct people? So what we are going to copy? We're going to copy these 3 amounts, project consultancy fees, 50, 30 and 40. Project consultancy fees, that is 50, 30, 40, right? I hope this thing which I have written over here to make you understand that normally students, what happens normally will help you to understand the placement of project consultancy fees. Correct? Okay. Continue reading in the question. What is left out? Last no forms cash balance on 1st July is 25. Why is it given? This will act as an opening balance over here. True? Okay. I think we are done. So we can start taking totals. Chalo, let's total it up. So please do take the opening balance as well. 25 and 60 and 45 and 50. 180 is a total over here. Then 15 plus 50 plus 10 plus 40 plus 35. 174 is the total over here. So people, I'm left with 6 rupees over here. Correct? And then again, I keep reminding every time that take this 6 rupees over here. Correct? Yeah. Without fail. Okay. So 6 plus 60 plus 45 plus 141. Right. Okay. 15 plus 17 plus 35 plus 12 plus 15 plus again 35, then 5, and then all that is 149. Oh my gosh. What happened? Receipts are less and payments are more. So you'll have a negative balance, guys. So how to do? Are my dear friends, it's not a cash account. This is a budget, right? So what you're informing the management that if you earn this 60, 45 and 50, 30 only in the month of August, and if you have to manage so many expenses, you will run short of how much? You'll run short of 8. I understand in cash account there is no negative balance, but this is not a cash account. This is a cash budget, right? So do fail. Without fail, take this over here. Okay. So 60 plus 50 plus 40 and remove that negative 8 from that. So 142. Okay. Then 15 plus 15 plus 40 plus 15 plus 15 plus 158. Oh my god. So again a negative balance of 60. Right? Means probably management. We are supplying this information to whom? To the management that see in August and September we're going to run short of money. So make sure that you borrow and arrange it. Right? That's what the main purpose of preparing the cash budget. Total is done, people. Total is done now. Yeah. You remember we have to, there is one more sub question over there which asked us to give some comments. Correct? Correct? Shri, I can't read your full name. 134455. Shri Kumar Age. I can't actually see your full name. I'll call you Shri. Fine. Yeah. Let's go ahead. So see in the question part 2. What is that? Suggest 2 improvements that could smoothen the cash position. Guys, listen to me. I hope you all are done writing. Hello? Are you done preparing this solution? So you are into with the next. Thank you. You are into the next part, listening to it carefully. Sure, we will continue. Now see, this is for sure that the firm is running short of cash. Okay. Now tell me, it's very interesting. Okay, that if we run, suppose at home, okay, or suppose you are as a student, you are running short of cash. So what will you stop first? Which expenses will curtail first? You'll first cut down your food. You'll first cut down your clothing. You'll cut down spending on footwear. Or you will try to find out that what are the expenses which are unnecessary. What are the expenses that I can postpone? Correct? See, the moment you run short of money, no, you don't immediately cut down on your necessities. You always try to cut down on your those expenses which you think that they are not necessary or they can be postponed, right? So let's try and identify. What about rent? It's an operating expense, guys. If you don't pay this, the owner of the place will kick you out of his premises. Correct? Stipend, I am very sure everybody will agree, sir, we have to pay this, right? Yeah, because you want to receive it or you will be on a receiving end, no? Telephone, see, we don't buy this telephone or we don't keep the telephone in the business for time pass. It's a basic requirement for communication. Office expenses, salaries we'll have to pay, training we'll have to pay, travel and conveyance. But see, people, it's a CA's office. So travel and conveyance is a part and parcel. Okay. Partners and assistant salary. Yes, you'll have to pay. Purchase of computer. Oh, this is something I should avoid, no? When I'm running short of money. Then you want to tell me, sir, we are chartered accountants, no? We are not going to buy this computer just to play PUBG. Right? We're going to use it for doing accounting of our client. Absolutely right. Did I say don't buy it? I just said don't purchase it. So what do you mean to go? What do you mean to say go to the showroom and steal one? No. But can't you buy this on installments? Instead of paying 50 lump sum, you pay 5 over here, 5 over here, 5 over here. Down the line, another you get 10 EMIs of 5,000 each. Possible, no? Right? So here we can manage. Taxes, howsoever you don't wish to pay them, you have to pay them. Then say branch opening. When you see such a shortage of money, shall we go for branch opening? Answer is no. So I have got 2 comments. And that's what we were looking for, right? Write down. Suggestions to write down. Suggestions to smoothen the cash position. Yeah, right. Suggestions to smoothen the cash position. Right. Number 1. Purchase of computer should be avoided. Purchase of computer should be avoided. Okay. The same can be obtained look here. The same can be obtained on hire purchase. I want you to copy the correct spelling. Okay, don't do hire purchase. HIGHER. Nah, installments. The same can be obtained on what? Hire purchase. And write the second suggestion. Branch opening expenses can be postponed as of now. When, that we will not tell. As of now, you don't do. Okay. Yes, people. Have you understood both these comments? Clear? So, not just randomly doing the things. We have read the whole question once again, solution once again, and we identify where are the expenses which we could have postponed. Absolutely understood, people? Right? Okay, thank you. No, lecture is not ending. Achha, Devesh has something to ask. Can you please turn on your camera? Hi, Devesh. Yes, Devish. Say what you want to say.
I was just asking in the telephone expenses, if the bracket part was not given, should we go with
1 minute. Actually, I'm
Hello?
unable to hear you clearly.
hello?
Yeah, na. Bolo. Yeah, please tell me.
In that telephone expenses, if the bracket part was not given, should we go with your
Yeah, correct. If that bracket part was not given, no, then we would have gone by common sense. April paid in, June, May paid in, July, and so on. Agreeable? Okay. Yeah. Who else has raised the hand? Can't read your full name. Yes, dear. Tell me. I've unmuted you. Manvi. Yes.
Sir, couldn't we avoid paying advance tax? Was it necessary?
Government will come and hit you at an appropriate place. These are the mandatory payments.
Advance tax, sir?
Yes. It is not.
Is it still mandatory?
It is, hello. It is not like paying the advance fees in the class. There are rules and regulations of calculating advance tax. Leave something for the tax professor.
Okay.
Leave something for the tax professor. What I will tell you just now, that once your gross tax liability crosses a certain limit in the same year, you have to pay taxes of next year. Means you start making money like Virat Kohli. You start making money like Sachin Tendulkar, right? Where you are earning so much.
I get that.
So that you have to, for sure, next year you have to pay tax. Then government tells you don't wait for the next year to come, right? Because see what happens, no? Except for the goddess of money, right? Everybody is running short of money, whether it be me or you or Mukesh Ambani. So if the taxes are not deducted well in time, at the end of the financial year, we all run short of money to pay taxes. So there are certain rules. So let's not talk about it. Okay, advance tax is compulsory.
Okay, sir.
Yeah. Karina, bolo. Yes.
Yes, sir. So I had a doubt that we are purchasing computer in July, right? So अपन को पूछा है कि cash position as on September. So why do we reduce? Because we purchased it in.
Does it not carry forward?
Yeah.
If you cut down the expenses in July, automatically what will happen? Your cash requirements will reduce, no?
Yeah, got it.
July gets carried forward to August, August gets carried forward to September, and so on.
Okay.
Yeah. Devesh, please turn on your video. Devesh is done, I hope. Devesh had a doubt sometime back. You're done, no? Put down your hands, no, if you're done. So I'm not left with any confusion. Yes. Okay. So I'm absolutely clear. Okay. Chalo, people. Let's go ahead. We're going for the next question. Sir seems to be in the mood to finish the topic today itself. Nothing like that. It's a small topic. Okay. Yeah. So we will read the next question. I hope I have cleared all your doubts related to this question. So now we are eligible to go for the next question. So let's read it, guys. 1 minute. A manufacturing company has prepared a budget. People, they have already prepared a budget. Sir, if they have prepared a budget, then what do we do? No, nothing like that. They have prepared a budget means they've estimated a few values for the year ended 31st December 20. Use the relevant data given below and prepare a cash budget. Okay, they have just estimated a few things. It's not that they've estimated the whole cash budget and you just have to copy paste. Okay, and prepare a cash budget for each of the months of what? Feb, March, and April. Okay, so for 3 months you have to prepare. Estimated variable cost per unit is given, guys. That you've done cost sheet. I'm sitting in front of experts in cost sheet, so I hope you understand that these are all variable costs: material, wages, production overheads. What do you mean by variable cost? The per unit cost is 3. Suppose for direct material, the per unit cost is 3, correct? So if you manufacture 1 unit, you'll spend on how much on material? 3 rupees, correct? If you manufacture 2 units, how much will you spend? 6 rupees. If you manufacture 3, how much will you spend? 9 rupees. Okay, fine. Practice up to 100 units at home. Huh? Okay. Homework. Huh? Yeah. So I hope you understand what is your variable cost. Okay. But so what do we do with this? My dear friends, you have to make a payment, no? You have to make a payment to material supplier. You have to make a payment to wages. You have to make a payment to production overheads. Correct? We are thinking from the viewpoint of what? Cash budget, very strictly. Fixed overheads are 48,000 per annum. These are expected to be incurred in what? Equal amounts each month during the budgeted period. 48,000 per annum. So my dear friends, this will be a payment. And even fixed overheads would be a payment. How much it will come to? Will it come to 4,000 per month? Yes, obviously. Now 48,000 per annum, you divide 4,000 per annum. Estimated sales are 11 rupees per unit for the first 5 months are given below. You remember in the last question, okay, we were given the values of sale. I'm talking about question number 1. See, here you are directly given the values of sales, 2,100, 1,800. Now what happens over here? They want to check your knowledge about table of 11. Why, sir? 11 rupees is the selling price per unit, no? Correct? So they want you to multiply it by units and opt in sales. Will it be that difficult? I'm very sure it won't be. So you are given units, fine. You just multiply all these by 11. So you will get what? You will get total sales. What will you get is a total sales. Okay, fine. Okay, let's read first. 10% of the sales will be made on cash. Ooh, wow, cash sales. So why are you so happy about it? Because I got one receipt. Okay. Not even a single rupee of this will come to me, but this is a cash sale. So in my cash budget, I got one receipt to write. But sir, only 10% is on cash, no? So the 90% is on charity or what? What will be the remaining 90%? It will be credit sale. So the balance they're writing now will be made on what? 1 month's credit. Oh wow, simple. So you sell in January on credit, you'll receive the money 1 month's credit. So in which month you'll receive? February. You sell in Feb, you'll receive in March, and so on, right? I hope you understand this. Okay, fine. So they've given you some information about finished goods stock and about stock of direct material. How we will use, we don't know, but we will first read it. Let's read, no? Just like a student, you in advance, how would you know the things? Right? So just like a student will read it. See what it says. 75% of the each month's invoiced sales units. What a complicated word. Invoiced sales units. What we should call it simply? Units sold. As simple as that, right? Now, invoice means billed. Billed sales unit means only what, Baba? Units sold. Okay, fine. What is important? To be produced in the month of sale. And 25% to be of this invoiced sales unit means only again units sold to be produced in the previous month. Oh, means what do they mean to say? Let's take one simple example. Suppose in January, sale is going to be 100 units, 100 units. So what they are saying, out of this 100 units, 75% of each month's units sold to be produced in the month of sale only. So in January, I'm going to sell 100 units. So out of this, 75 would be produced in Jan, correct? And the balance 25 would be produced in the previous month. So what is the previous month of Jan? Any knowledge? Think and tell tomorrow. December. What, sir? Everybody knows that. But then see, to sell 100 units in January, how you produce? You produce 25 in December and you produce 75 in Jan. So what does this? What is the value addition over here? What do we do with this, my dear students? You are given with the units sold every month. Can't we calculate units produced from it? We know the pattern of production now. Can't we calculate units produced? Yes, we can calculate. So what is the point calculating units produced? Or my dear friends, we have to make payment of wages, which will be based on units produced. We have to make payment of production overheads, which will be based on units produced too. So units produced calculation is very useful. It's not a waste of time. Okay, see the next. Stock of direct material. 50% of the direct material required for each one's production to be purchased in the previous month. So, okay, again, I'll give you the example like this. Suppose now in Jan, we're not talking about sale, but we're talking about production. Okay, we are producing 100 units. So for production, you have to purchase, no? No? Raw material will fall from skies? No, obviously not. So you'll purchase. So what they are saying, 50% to be purchased in what? 50% to be purchased in previous month. Again, previous month of Jan is December. So 50 units you'll purchase in December. What about the remaining 50 units? Obviously in the same month, no. You can't, you can't produce in Jan and purchase in Feb. You're producing Jan, so you'll have to purchase the raw material last in the month of Jan. How this will help, sir? My dear friends, this will help you to calculate units purchased. So where it will be used? For direct material, the payment to creditors will be based on what? It will be based on units purchased. That's why they have given you this information. You have to multiply this by units, na? But which units? For direct material payment, you will pay him on the basis of units purchased. Whatever you purchase from the creditor, on that basis you will make a payment. Right? For the wages, you will use units produced. If he produces 1 unit, you pay him 4 rupees. If he produces 2 units, you pay him 8 rupees, and so on. Okay. So this information, point number 1 will help us calculate what? Units produced. And point number 2 will help us calculate what? Units purchased. Okay. Then see, terms of payment, direct material to be paid for in the month following the month of purchase. Now, I hope after solving 2 questions, you understand this. Following the month of purchase means what? Next month, right? So in January you purchase, you'll pay in Feb. In Feb you purchase, you'll pay in March, and so on. Direct wages, how they are to be paid? 50% in the month used and the balance in the following month. Hello students, what is told? 50% in the month used and the balance in what? Following month. Have we done a similar condition? What do you say? Have we done a similar condition earlier? Yes or no? Done. Where? Taxation fees in the last question. Correct? In last question, it was an income. Correct? Half of the taxation fee in the same month, half in the next month. Remember, we did a working note. I'll share with you. Wait. See this taxation fee working? Half received in same month, half received in next month. And now here it's not a fee, no receipt. It is not to be received, it is to be paid. But the pattern is same, na? What you are doing with the wages of June, half you will pay in June, half you will pay in July. Same pattern, guys, same pattern. Note it. See, direct wages 50% in the month used and the balance in the following month. Okay. Expenses. Which expenses they are talking about, guys? Here material got covered. Here wages got covered. So we have only one thing left out. No? What is that? Production overheads. Correct? We are only the one thing left out. What is that? Production overheads. What is this 1 month lag? You understand 1 month lag? That is delay. Oh, means same thing after 1 month. Hello? You understand word lag? You all must have heard of a jet lag. People travel from one country to the other country. They start in US. They start at late night and then they again reach after traveling for 18 hours. They again reach at the night only. What nonsense. The night extends for 24 hours. No. The next day's night starts over here. And then they stay over here. Everybody gets up at 10 o'clock and they start feeling sleepy at 10 o'clock in the morning. Jet lag. Right? So here what happens? We are not talking about any jet lag, but time lag. So 1 month delay. Lag is what? Simply delay. Right? Okay. And estimated cash balance on 1st Feb is given 5,000. What is this for? We have to prepare for Feb, March, April, no? So this is the opening balance. People, listen, count. Receipt 1, cash sales. And are you going to write credit sales? No, you will write collection from debtors. Only 2 receipts. Cash sales and collection from debtors. And payment, the count, no. 1, 2, 3, 4. P. You've written 4 payments, 2 receipts. So you can have a small format as well. Doesn't matter. Yeah, that's it. See, I've literally counted the lines and left 1, 2, and here it's 1, 2, 3, 4. Maybe a line extra, but 4 lines in payments will be more than sufficient. Shall we start, people? Sure, let's get into it. So you'll utilize the points one by one. See, what on this spot I can write? I can write fixed overhead. See, material. Okay, we can just write like that in estimated payments to make things that we know, right? What we know. We have to write over here what? Cash sales, correct? Then we have to write what? Collection from debtors, right? See, even if you don't write like this in the beginning, you complete each one note and then later on also write, that is absolutely fine. Then payment to materials, payment to wages, payment to production OHS, overheads, and fixed overheads. Out of this, what we can finish just now? I think fixed overheads we can write just now. We can write over here, it is 48,000 per annum divided by 12. So it will be 4,000 per month, correct? Then now, see, the next point is all about that. No sales, 10% sales will be made on cash and the balance will be made on 1 month's credit. So see, now we will focus on calculating cash sales and what? Collection from debtors. Now, how first of all I'll get total sales? Say units sold multiplied by selling price per unit. So selling price is 11 rupees. So 11 into 6,200 will give us 68,200. 11 into 6,800 will give us 74,800. 11 into 5,400, 59,400. And then 6,000 will be what? 66,000. We don't need a calci for this. Okay. Yeah. Now listen to me. What is told? 10% is going to be cash sales. See, I've written cash sales in the bracket. 10% of the total. Credit sales 90%. Then I'm immediately specified also, but we need a collection from debtors. Wait. So how would you solve? I know that you'll be good in using calculator. 68,200 is our total sales. 68,200 is our total sales. What do we do? Into 10%. That's what you do. And you get 6820. Correct? So in cash sales, you'll write 6820. Please don't clear your calculation. Wait. Now this 10% is there. Now I'm very much sure that you must be knowing that you do minus and you press equal to and you get the balancing figure. So it is 61,380. Credit sales is 61,380. I hope you know this. It's very simple. You must have used it in mathematics and foundation a lot. So 74,800 into 10%, 7480. Just don't touch any other key. Just say minus equal to. You get the difference. 67,320. 59,400 into 10% is 5,940. and just do minus equal to 53,460 and 66,000 into 10%, 6,600 is a minus equal to, that is 59,400. And same over here, no? Copy paste, we are good at it. Okay, now students, see, out of this, these three numbers, what they are? Aren't they cash sales? Correct, no? They are cash sales, no? Of which months? Of the month Feb, March, April. Through that, you can directly copy this in solution, right? So I'll write 7480 cash sales. Okay, note number 7480 and 5940. 6,600. Give me some reactions if you have understood this. Is it like your state of mind is like now enough of studies? Like you can listen to me till 11:10 right now. Yeah, I've kept the session as light as possible, right? So I hope means you are doing with the same vigor as you were doing at 8 o'clock, right? Don't go down, people. Don't go down. Think about the huge bank balances that will come to you after you clear CA. Right? You just open your cupboard and the bundle notes are falling like 2,000 rupees. Bundles are falling down. You're somehow managing, right? Every branch near your house is calling you. Okay, sir, madam, take out some money. Know how much money you are keeping in our bank. We are getting tension. Right? Think about that glorious future and work hard right now. Okay. Yeah. So see, we're writing it very clear that credit sales is going to be 90% that we have already calculated. And see, I've drawn the enough lines to make you understand. See how the collection from data will happen. All credit sales will be collected in the next month. So I hope it should be simple for you to understand. So the credit sale of January, 61,380 will be collected in Feb. Credit sale of Feb, 67,320 will be collected in March, and the credit sale of March, 53,460. Right, people? Enough. No, you want to still write 59,400 in the month of May. It doesn't matter. But Feb, March, April is what we need actually to complete this question. So these three figures are sufficient for us. Okay, people. So now what we are left with? We are left with payment to materials, for which what we discussed. What we need for that, we need units purchased. For wages, we need units produced, and for even production overheads, we need units produced. So now here onwards, we can't complete even a single word till the time we don't calculate units purchased and units produced. So I'll go with the calculation. See, you can see this working note number 2. What is written? Calculation of what? Units produced and units purchased. Okay. But then what we know in the question? What we know in the question is units sold. So from the table that is given on page number 164, we will copy all the details. Units sold in January are 6,200. 6,800, 5,400, 6,000 and 6,000. Okay. This one wrong. 26. Okay, so let's start. See now. See, pay attention over here. After this first, what I have written is a pattern of production. Okay, you need to understand this very carefully. What we read in the question. That what is the pattern of production? 75% production happens in the same month, and the balance 25% production happens in the previous month of whatever you are selling. Okay, so see, guys, in January, you want to sell 6,200. So out of this, 75% you'll produce in Jan itself, correct? And the balance you'll produce in the month of what? December. Now December is too much out of my purview, so I don't bother to write about it, correct? So 6,200 of that 75% comes to 4,650. Comes to what? 4,650. So 4,650 will be produced in Jan. Remaining whatever it comes now, 1,550. Let it go in the month of December. So I'm not writing, right? Now people understand the same pattern will follow over here. 75% of Feb will be produced in Feb itself. The balance would be produced in the month of what? Jan. Correct. So now what will be the amounts? The amounts would be 6,800 into 75% comes to 5,100. So 5,100 will get produced in the month of Feb itself, and the remaining 1,700 will get produced in the month of Jan. Right? Hope you understand this pattern of production. Okay. Now for the March, we are selling 5,400 units. So of which 75% will be produced in March itself, and the balance will be produced in the month of Feb. Correct. So 5,400 into 75%, 4,050 would be produced in the month of March, and the balance would be produced in the month of Feb. Got it? Okay, April, very easy to calculate, right? You understood, so I will complete my drawing first. So here it will be 4,500, and it will be 1,500. Same over here, 4,500 and 1,500. But here I'll have to put question mark of people because we don't have data for June. No? Anyway, see now if you understand properly, see, so if you ask me, sir, finally what is produced in the month of Jan? So I'll add these two numbers. Correct? What is produced in the month of Jan? So I'll add these two numbers. Do you agree, guys? Hello? You agree to the calculations? You have understood this presentation properly, right? Okay, thank you. Yes, people. So now we can just total it up. So 4,650 plus 1,700 is 6,350 5,100 plus 1,350 is 6,450. And then 4,050 plus 1,500, 5,550. And this happens to be 6,000. And here we can't calculate because we don't know these numbers. Anyways, now we got units produced for Jan, Feb, and March and April. Fine enough. Now again the same thing, guys. Whatever we are producing, no, same process. Out of that, 50% will buy in the same month and 50% will buy in the previous month. Same way, right? Which I don't know the amount over here, so all question marks. Okay, so let's do half of it. 6,350 divided by 2, 3,175 over here. 3,175 goes there in December. Leave it. 6,450 half. 3,225. So 3,225 we will purchase in Feb, and 3,225 will purchase in Jan. Half of 5,550, 2,775. Okay, and 3,000 over here. 3,000 over here. Lot of question marks, right? Nothing to be written over here. We don't have data. What do we do? Okay, so finally we'll get units purchased over here. Okay, so 3,175 plus 3,225, 6,400 over here. 3,225 plus 2,775, 6,000 over here. Then this is happens to be 5,775. This we cannot write now because we don't have the lower data, and this also we can't write. Whatever we could write, we have included. Now see, we have enough data that we can complete our solution. We have enough data. See, I have a full line of units produced, correct people? And I have a full line of what? Units purchased, correct? So with the help of this data, we can fill up the things, right? Guys, hello, I'm here. Calculations are clearly understood by every one of us? Absolutely. Okay. So let's move ahead. You stopped giving me kudos, you stopped reacting. Everybody is like, sir, finish the lecture and let us go home. You have one more lecture after this? No? Manu is laughing. Yes, people. So don't be so dull. Come on, come on. As you are fresh in the morning, no? Mohsin missing. Mohsin's video is off. Mohsin is sleeping, only putting reactions. Chalo, let's calculate, people. Let's calculate. You done writing this much? So see, you have to do this now. happens? Okay, people, see, now we have to utilize this information, right? And calculate this payment to creditors. Payment to creditors is direct material. It is based on units purchased. Now, so copy this now. This one, units purchased, right? So I'll write over here units purchased 6,400, 6,000, and what? 577. We don't know this, we don't know this. Doesn't matter. What is the rate of material per unit? Check out, no? It is 3 rupees. So multiplied by 3. Calculate the total purchases. See, by multiplying this, what you will get is not the amount paid. You will get the total purchases. So 6,400 into 3 is 19,200. This would be obviously 18,000. And 5,775 into 3. So 17,325. Okay, we don't know these amounts. Absolutely fine now. What is the pattern of payment, guys? Focus on that. You people are getting worried, sir. What about the amount in April? Because we have to prepare for Feb, March, April. Many people were clueless when we did not know this amount, when we did not know these units. They were worried now what to do. But you know, since morning I'm doing this, so you said, yeah, chalo, fine. We don't have to write total purchases. What we have to write, we have to write payment. And what is the pattern of payment? 100% next month. How did this happen? I only got kicked out. My video was on. I have not written student ID. I don't know what went wrong. Back. Yeah. Wait a minute. Let me complete the process. Okay, people, let's move on. So now see, what is the pattern of payment? 100% next month. So this 19,200 would be paid in which month? It would be paid in Feb. Getting my point? This 19,200 would be paid in Feb. This 18,000 would be paid in March, and whatever the blank was left out, no, 17,325 will be paid in the month of what? April. Oh, relax. So we got all the 3 amounts, correct? So now we can write over here. The payment to material we can write. Copy these amounts. Payment to creditors. Okay. Now, guys, you have a message. Keep your video on. Right, people? Oh my goodness, so many people are really there. Good. So you need a warning basically, right? To turn your videos on. Come on. Pay attention over here. Yeah. So see, we are done till here, right? Now for wages again. So fine. Now wages will use this. Which one? We'll use the units produced. Correct. So copy this units produced in the wages working note. Units produced 6350, 6450, 5550. Last one was what? 6000. Yeah. Okay. We'll multiply it by wages per unit, and the wages per unit are 4. Multiply. Come on. Again, I repeat, but after multiplying with this, what you will get? You will not get the wages paid. You will get the total wages, right? So let's do that. 6350 into 4, 25,400. Okay. We can complete the payment over here itself. Right? What it says that 50% same month. So half of it, 12,700 would be paid over here, and 12,700 would be paid over. Right now, you know what is to be done. Correct. Similarly, 6450 into 4, if we do, we get 25,800, of which 12,900 will pay in the same month, and the balance 12,900 will pay in the next month, right? I hope you remember. Same as what? Taxation fees. Then 5550 into 4, 22,200. Of this, 11,100 will pay in the same month and 11,100 in the next month, right, guys? And this will be 24,000, of which 12,000 will pay in the same month and 12,000 will be paid in the next month. Whatever. We are concerned with 3 months. We are concerned simply with this Feb, March, and April. Correct. So if I think that what will be my payment in Feb, March, and April, so the answer is this, right, people? This is our answer. This total of all these, right? So yes, we can write now. So 12,900 plus 12,700, 25,600. Correct. 25,600 over here. Next 11 and 12, 13 and 23, 24 over here. This will be 23,100. Okay. So wages we can copy now. Done. And then the last one, production overheads. Again, guys, production overheads will be same based on what units produced. So you can get those units produced. From there you can copy now. 6350, 6450, 5550, and 6,000. What is the rate of production overheads per unit? 2 rupees. Okay. So do multiply by 2 rupees. So this would be 12,700, 12,900, 11,100, and 12,000. Okay. And how the payment happens? 1 month's lag. No. So basically, this 12,700 you will pay in the next month. Correct. Na? Our concern is Feb, March, April. Na? So we'll calculate for those months only. More than enough, right? We got the 3 amounts. Correct. So I'm writing the amounts over here. So people, all the information is utilized, all the receipts and all payments are done. I think we still have to just write the opening balance. Correct? Now the last point number 4 in the question. Cash balance on 1st Feb is 5,000. So write this 5,000. Okay. And then you can start closing the things. So 5,000 plus 740 6138. $70,860. So 61,500. $12,360 is left out, right? Again, the same thing, now people. 12,360 will bring over here, right? Now I hope now you remember this. Closing of this has to go over here, correct? Yeah. Let's put it like this, otherwise people will say. So from where it goes where? Better. Okay. So continue. 12,360 plus 5940 plus 67,320. 85,620. It's 24,000 plus 100. 58,900. $26,720. Again, the same thing, guys. Bring this 26,720 over here. $26,780. That's the final balance, people. Chat, but so on. Somebody had raised a hand. Somebody did raise a hand, but I can't see that now. Wait a minute. Asima, you have to ask something. We are done with the class, so you can ask.
Sir, in this production overhead, why did we take the invoice of the previous month? It's not mentioned anywhere. We should have taken February, March, and April figures, right?
Can you be a little slow? I'm a slow learner.
Yes, sir. Sir, for production
One
overhead.
minute. You're talking about production overheads, right?
Yes, sir.
So I'll bring it in front of you. Okay, fine.
Why did we take the figures of the previous month?
Previous month?
Here the lagging thing is not given for production overheads, right?
Oh my dear. I think you were sipping water when I told. Missing for a moment. That's how it happens. Wait a minute. Wait a minute. Don't go. Be here.
Yes, sir. Yes, sir.
See. Terms of payment. What is written? Terms of payment. See, basically we are making payment as told in the question, no?
Yeah.
So material to be paid for in the month following the month of purchase. Means.
So where exactly is it? I can't find it.
Just wait for a minute. Now listen to me.
Okay, sir.
See, what is told about direct material to be paid for in the month following the month of purchase. So,
yes.
How did you make a payment for material? See, you purchased in the month of Jan. You made a payment in February, following the month of purchase. Any problem in this?
No.
No. Okay. What is told about wages? 50% same month, 50% next month.
Next month.
Any problem in this?
No.
No. Okay. Good. Then, my dear, here I told, see now what is left out. Expenses. If I zoom it further, no people, my neighbor people would be able to read this.
Yes, sir, got it.
What is written?
1 month lag.
1 month lag, right? I don't want anyone to learn free from me, right? I'm zooming it out. Otherwise, everybody will read this.
Okay, sir.
Expenses, jokes apart. Expenses is 1 month lag, no?
Yeah.
Which
So that's what, sir. How did you get to know that it was production overheads?
Who else is left out? You tell me, no? I'm not some Antaryami Baba. I just know from here. Material done. Following month. Wages done. 50% same month, 50% next month. Production overheads are the only expenses left out. Fixed overheads is very clearly told. Each month you have to make an equal amount of payment.
Yes.
So production overheads is what? Expenses only, no?
Yeah.
So which expenses are left out?
Production overheads.
Exactly. That's what I told over here also. See, I have not written it just now. Written that time also. See, now nothing else is left out. So these are production overheads only.
Yes, sir.
And 1 month lag, you understand or you don't understand
Yes,
that?
That I understood, sir.
Then
I
it
was
is
just
simple.
confused that it's written expenses and why do we consider production overheads?
My dear, but production overheads are also expenses only.
Yes, sir.
That's it. So that's how we have done it.
Okay, sir. Sir, and one more thing. How did you determine that for what you are calculating quantity produced and so for some you are calculating quantity purchased? How?
Common sense.
Sir, that is obvious, sir, but
I'll justify, no? I'm buying material from you.
yes.
Okay, so I buy the material cost is 3 rupees. So we'll revise the table of 3 again. Okay. Yeah. Tell me. So the material cost is 3 rupee. I buy 1 unit from you. So
Yes,
I'll
sir.
pay you how much?
3,
Correct. I buy 2 units. I'll pay you how much?
6.
Super. Excellent. Lot of knowledge. If I buy 3 units from you, I'll pay you how much?
9.
Actually, you're calculating on calculus.
No, sir. No, sir.
So, my dear, it is based on what?
Purchases.
Precisely, no?
Yeah.
Now, assume that you are a worker in my factory. Okay. And I have promised you that you produce 1 unit, I'll pay you 4 rupees.
Yes.
Now you produce 2 units, I'll pay you
8 rupees.
Super. You know it almost. You are a ranker material. You produce 10 units. I'll pay you
40.
Super, yeah, you know it. And then production overheads. If the name suggests no production overheads.
Okay.
So
it will not produced, yes. Yes.
So they'll be based on what?
The units which are produced.
See, if I tell you my name is Sandeep sir.
Yes, sir.
So what is my name?
Sir, you just said.
So it's production overhead. So, but obviously they'll be based on what units produced.
Okay.
What a very interesting discussion.
Thank you, sir.
Fine. I hope the doubt is clear.
Yes, sir.
Okay. Who's that? Keshava, turn on your video. And don't show me how you charge your mobiles. I've asked you to unmute. Go ahead.
Question. Fixed overheads are given, they are paid in the same month only.
Lot of noise in the background.
Just a second, sir.
I've asked you to unmute. Whenever you can do it, do it.
Sir, now can you hear me?
You go on. There is some noise in the background, but you go on. I'll make it out.
Sir, in fixed overheads,
Uh-huh.
it is paid in the same month.
It's not
When-
stated. Not stated that it is in the same month.
No, it is stated.
Okay. Okay.
But what if it was not stated? Both production and fixed would be paid in the next month. As it is given.
Why you think like this? See, I'll always tell you like this. See, today morning 8 o'clock, whether we were knowing each other, no. Now we know each other. That okay, fine. Sandeep sir has come to teach you FM. If Sandeep sir had not come, who had come? Even I don't know. Even you don't know. It has to be told to you, know. We are doing FM now, my dear. We are not talking about psychology, and we're not talking about stress management. Like, okay, they will tell you, as they have told in the question. See, if they don't tell you that it is paid in the same month, they will have to tell, no.
Yes, sir.
Don't you think that the answer to this is very simple? That the data would be given in the question. Absolutely. I could read Mohsin. Mohsin said data would be given in the, then he said question. Right, Keshav? You get my point?
Yes, sir.
You can't be left in blank, na? You go to the factory and find out. You can't be doing that. They have to specify in the question. So this cannot be a tension to us. Like what will happen when it comes in the exam? Suppose in the exam nothing is written. That cannot happen. That has to, the terms of payment has to be given in the question, right?
Yes, sir.
Yes, Mohsin. Yeah, you can go silent, Keshav. Yes, Mohsin.
Hello, sir. Am I audible?
Yes, very much.
So in question number 2, I missed the second suggestion that you gave regarding the new branch. What's the statement that you're supposed to write?
Simple. Branch opening expenses should be avoided as of now.
Okay, sir.
We are running short of money. Why to open a branch?
Okay, so I had missed the statement. I'll note it down.
No worries.
That's all, sir. Thank you.
Okay. Anyone else? If you have to say something, you have to raise your hand now. If you have to say something which you don't want me to listen, then remain mute and talk. No problem. But other way to say, yes, Drashti. I've asked you to unmute.
Sir, due to bad net connections, I couldn't hear the first working note. If you could just go over once.
Which one?
The first working note of the third question. I missed out the first working note part. So.
Be there, huh? Don't mute. Be there. Are you there or you're lost?
I'm there, sir.
Which one you're talking about?
The
this
first working note, sir.
This is first working note. Working note number 1. This is the solution. Question number 3, right? This is what I hope you have written in full.
Yeah, sir.
Okay. So
this
is
second working note. Sorry. Second working note.
What happened? You tell me. You not understood or?
I didn't hear, so I was just lost when I came back. And
Fine. You lost the most important part.
Yeah.
See what is told in the question. I hope, see, this yellow markings will help you understand. Pattern of production is given in the question. 75% production happens in the same month. 25% production happens in the previous month. How did we come to know? When we read the question, at least,
Yeah.
right? When we read the question, at least that time you were there.
Yeah, sir.
Right? So we had worked out like this. Okay, fine. 75% is produced in the same month and the 25% is produced in the previous month. Correct, people? Correct?
Yes, sir.
So the same thing we use over here, not here. So what we have done, whatever we have sold, of that 75% production we have taken in the same month. So 6,200, 75%, 4650 coming in the same month. Remaining goes in the December, but then I'm not written for the December. Now talking about Feb, like 6,800 are going to get sold in Feb. So what will happen? Out of that, 75% will be produced in the Feb itself. So what have I done? 6,800 into 75%, 5,100 I've written in the Feb.
Okay.
What about the remaining 1,700? They will be
on the previous month.
Got it. So
Yeah.
now you focus on the month of Jan. No, in the month of Jan, what all things would be produced? This 4650 will be produced in Jan also, and even this 1,700 will also
of the next month.
Got this? So
Yeah.
the total production in the month of Jan would be 6,350.
Sir, then why did we take these units for finding the wages in the materials?
Sorry?
We use these units for the material and wages, right?
Not for material. For material, we have used the purchases.
Sorry, the wages. Why did we take these?
I think somebody just now asked, no? Preeti or someone asked me just now, and I had a detailed discussion about this. Somebody did ask me, and then
I was, yeah.
I think who had asked? Raise the hand. We had a calculation, good calculation. How do I pay my worker? Suppose you are my worker.
Okay, yeah.
Suppose you are working in my factory. How would I pay you? I'd pay you on the basis of units produced.
I mean, it's not mentioned in the question, right? Like usually they give the wages and.
Suppose I sit in a cab. How would I pay? Based on the meter?
Yeah.
But it is nowhere written.
Okay.
What do I do now? I tell him, see, it's nowhere written that you have to pay based on that meter. I will not pay.
Okay. I mean, usually till now, whenever there's wages, they give the amount.
But fine, now you know per unit wages, you know units produced. You can just multiply and get the total wages.
Okay. I think I missed the part of the question explanation also. Maybe that's why.
But still, come on.
I understood now. Like now that this thing is given, so we'll take according to that.
You agree that these are units produced?
Yeah.
6,350, or you don't agree on that?
I agree.
Fine, thank you. Now you tell me, what is the wage rate per unit?
I missed that one.
4? 4, no? So 4 is for 1. For 2 units, it will be 8. For 3 units, it will be 12. Like that, you go on practicing, and you practice for how many units? You have to practice for 6,350 units.
Okay. Got it.
Are you sure?
Yes, I got it. Thank you.
Then I have taken that 6,350 units into 4. That makes 2 total wages. And then I follow the payment condition that 50% same month, 50% next month.
Okay. That's it, sir.
Sure.
Thank you. Yes, sir.
Okay. Anyone else? Are we done, people, with the today's work? You'll have understood absolutely what has happened today. Turn on your videos for a moment. Those who are there. Hello, everyone. Since morning, I'm talking with you people, right? Would you understand the things that I've discussed with you properly? Right? Okay, fine. So the next thing that you need to do is, once you close the books for the today, don't open them directly tomorrow. Right? one quick revision. Yeah, just go through the things. Just go through the things, right? Just go through the things for some time. What? It will take 10-15 minutes in the evening just to go through it, but that will make your concept strong. I tell you, people think like this. See, today only we learned. No, sir, we remember everything. Why should we revise today? But you know, that's the best way of retaining the things. If you revise tonight, maybe for next few months, you will be remembering the things. So please, please, please revise tonight. Tomorrow, I think also we have a class at 8 o'clock in the morning, right? So just don't get up at 7:59. Get up little early. Take another 10 minutes to go through the things, and then meet me. I'll be logged in by 7:50 for sure. Okay, so meet me by 7:50, 55. Right, 8 o'clock. Every one of us should start. Right, people. Okay. I hope you have understood and, if possible, enjoyed a little with me. And I manage online whatever possible, not to make it that boring for you people. Correct? Okay. So keep talking, keep communicating, keep doing all actions, keep supporting, right? Okay. Chalo. Thank you all of you. Have a great day ahead. Let's meet tomorrow morning. Okay. Chalo. Bye everyone. Bye bye is Yashasvi still has to ask something. I don't. Those who want to ask can be there. Others who want to get entertained can also be there. Those who are bugged up with me can leave.
Sir, morning, sir.
Good morning.
Sir, in question number 2, you said that advance tax, we cannot avoid it.
My dear, if it is about formalities about the taxation, please don't bother him.
So it's a simple one, sir.
Okay, bother.
Even though we can't avoid it, why can't we postpone it, sir? I mean, further we can pay it later as...
Government rules, please contact tax professor.
Okay, sir.
See, once the year gets over, you have to pay tax, no?
Yes, sir.
See, last 2020 was absolutely different thing which happened in all our lives for the first time.
Yes, sir.
Right, where government kept on extending the due date of tax payment.
Yes, sir.
That's an abnormal situation. Never wanted in the life again situation.
Yes, sir.
But otherwise, tell me, there's a fixed due date?
There may be, sir. I mean,
huh?
Yes, sir.
If you don't know, I will tell you. There's a fixed due date.
Yes, sir.
And if I don't file my tax returns, no, the first thing happens is I'm charged. If I'm late by 1 day, I'm charged rupees 10,000 by government.
Oh, okay, sir.
You getting me? So these are
Yes,
all. These are so what I told you. See, don't make me explain you the tax subject. Just take my word. Okay, fine. Advance tax you have to pay.
Okay, sir.
Right? Once you become a chartered accountant, you will have a list of your taxpayers who will bother you. Sir, my tax payments, sir, my advance tax payments, sir, quarterly tax payment, please make a payment. Provided the rules remain same. But as of today, if you are a chartered, your clients, those who are liable to pay advance tax, would have bothered you like anything at the end of the 1 quarter. Sir, please pay, please pay. If you don't pay on time, what happens? You will be subjected to interest and penalties.
The charges, sir, right?
Yeah. So it's not an optional payment.
Yes, I got it. Thank you, sir.
Anybody else now? Done? No more doubts? You may have a lot of doubts in the life, but I'm talking about FM. No more doubts left, right? Okay. Chalo, then we will stop for the day. Then let's meet up tomorrow. Okay. Bye, everyone. Thank you. Thank you. Thank you. Thank you for you all. Thank you so much for cooperating. Bye-bye. Let's meet tomorrow morning. I'll be on time. Bye. Revise and come. Okay. Yeah.